Thank you so much for helping us solve all these stock related queries. Appreciate your time here on the channel, but time for a very short break, viewers. The next half an hour, a lot more stock related queries. Do stay tuned.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। देखे होंगे
Rajesh. The next question that's coming in is on Dixon Tech. Now, again, a stock that's up and about in trade today. Largely, you could say some of the trade deal impact. Its biggest client in the phone space, Motorola, also does use it for exports. But he's asking a short-term view, and this is coming in from Sunita. Rajesh, on Dixon Tech, a lot of correction from the highs. Should she continue?
18,000. So, and now if we see, it has approached a long-term support of around 200 weekly, and the kind of weekly formation we are seeing, it's like a morning star pattern. So as of now, there is a strong reversal in place. Hold on to it, can add also on the downside 10,200, or you can say 10,000 is the immediate support. The stock can expect a bounce back towards 12,500 levels. So overall, a reversal candidate, so can add on to it.
Okay, all right. So that's the view coming in on Dixon Tech. We've got Ramesh calling us from Andhra Pradesh. Ramesh, hi. A very good afternoon to you. I believe you have a question on KP Energy.
Yes, ma'am.
Go ahead, ask your question.
I'm holding 200 shares, madam. Average price is 380 rupees. Should I accumulate more and do average? I can invest it for 3 to 5 years, even though it posted somewhat good results, but the stock is correcting.
Okay.
So what should I do now? Should I add here 50% of it? I currently invested 1 more lakh in this stock. I wait or invested about 30% at the current price.
All right. Okay, got your question. I'll take this up with Prashant. Prashant, it's a fairly small company, 1,900 crore market cap, but part of the KP group. Do you have a view at all on this one?
I think yes, with respect to fundamentals, I think the valuation looks very much attractive with a very low valuation of 12p and price to book value of almost like 4. The ratios are very attractive. This is not in my research universe to have a fundamental outlook, but again, considering the industry which is into infrastructure, energy, development and all, I think the long-term outlook is really good, but there is some kind of risk associated with the short-term outlook.
Okay, all right. So that's the view coming in on KP Energy. But you know what? Adani Defense and Aerospace today announced the signing of a memorandum of understanding with Leonardo, which is an Italian global company in aerospace, defense and security. This basically is to develop, manufacture and sustain a helicopter manufacturing ecosystem in India. On the sidelines of the event, my colleague Danish spoke to Jeet Adani, director of Adani Defense. Let's listen in.
You know, for the group, it's a reaffirmation to the commitment of being being an important player in the overall aviation ecosystem. You know, not just across service or airports, but also was manufacturing. And we want to give an end-to-end service to our clients across airlines, across armed forces, and be able to, serve the country better and create more economics for the people of the country.
That was my colleague Danish, of course, getting us that key perspective. And viewer standard disclaimer, the channel that you're watching is part of the Adani group, and so was Adani Defense, of course. This is on PG Electroplast, a key stock. Yet again, a lot of investor interest in this one. Hitesh from Mumbai is holding 35 shares at 519. And he's asking basically that even on such a good day, why is the stock down and out? Now, actually, it was up and about in the start of the trading session, has seen some correction. But, Prashant, on this counter, while the Q3 results were quite strong, we are waiting the management commentary in the con call. But would you be a buyer right now? And what would you be watching out for?
Waiting and watching out for the management guidance, the way how they are going to take it forward for the next 1 year, 12 months from the current levels. The valuations are still expensive at this point of time, trading at a 60p and 6.5 to book valuation. So such kind of company with respect to electronic manufacturing services, still we need a lot of support from the government. Even in the budget, there was some kind of allocation done for EMS as a segment. So for me, as a long term, I am very much bullish, but short term, I think valuation correction can come with respect to their earning growth versus the price growth which recently has happened. But I need to wait and watch and take a best call. But time being, hold for long term.
Got that view, Prashant. But next caller coming from Hyderabad. Madhvi is dialing in for a stock query. Madhvi, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon. So I'm holding GK Energy at the rate of 152 rupees.
Alright, Madhvi, we don't discuss this stock too often, but let me just try it. Prashant, by any chance, do you track this counter, GK Energy? Currently trading at 103, and it is a recent listing as well. So I don't think we can get a technical view, but by any chance, do you track this counter?
No, I think because of the limited data, it's very difficult to have kind of very long-term outlook on this. But considering the 3-4 quarterly earnings, I think this is a decent company right now. What went wrong? I think one should go and do some detailed research on this company. For time being, it's some kind of high-risk, high-return category stock.
Got it. So hopefully that does help you, Madhvi, in this on this particular counter. But another one that we're getting a stock query on is on PB Fintech actually. Now this counter is down and out today as well. And our viewer actually Lalita from Bengaluru, who is a regular viewer, bought it at 1920. So she's asking on this particular counter if she should continue to hold buy or if she should continue to hold her shares. What's your view, Prashant? Again, a counter that's not cheap but is seen.
Again, valuation is a concern for me at this point of time. 100 plus price to book valuation 10 times. And the earning growths are very much limited. So I need to have some kind of exponential earning growth which can help me to justify this kind of valuations, which is missing at this point of time. So if she's asking for an advice, I think it's the right time to exit at this point of time.
Okay, all right. So that's the view coming in on PB Fintech. We've got our next caller. Sanjay is calling us from Mysuru. Sanjay, hi. Very good afternoon to you. How can we help you?
Hi, good afternoon, ma'am.
Good afternoon. Go ahead with your query.
KPI Technology in right time to in 3 lakhs investment short term, ma'am.
Short term. Okay, you want to invest, right? So I'll take this up with Rajesh then. Rajesh, before I go on to Rajesh, actually, Sanjay, how much would this be as a percentage of your portfolio?
Some kind of bounce back can be expected. So can add a small bit of positions. The stock can move back towards its 200 DMA towards 1200 levels. So can add a small position with a stop loss of around 940 levels. But the immediate target would be around 1200 only.
Got the view, Rajesh. The next question that we're getting is on Ather Industries. Now, this is of course the chemical maker. And our viewer Ramesh is actually asking what he should do with this counter. He's holding it at 801, bought 100 shares. So he is in a profit. Prashant, on this counter, what should Ramesh do?
Very positive on the specialty chemicals deal with India and US. I think chemical industry will get a lot of boost, and the industry was expecting with respect to volume degrowth because of the a high tariff. I think that will be very, very beneficial for a specialty chemical, and obviously I think there will be like 15-20% of exposure to the US, which will be now a high visibility, and they can be higher margin expected going forward. I think that was the reason why the stock has really outperformed from November to till date, but today due to some kind of market reaction and profit booking attempt, the stock is down, but continue to hold. I think even valuations are justified in the way the company is delivering the earning growth.
Okay, all right. So that's the view coming in on Ather. The next question that we have is on IEX, and this is from Joseph, who's writing us from Kochi, asking about this counter from a short-term perspective. Is bought at the levels of 135 and 2,500 is the quantity. Rajesh, your view?
So the counter is in oversold zone and some kind of support is there. So today also we are seeing some bullish formation. So in the near term, we can expect a move towards 135 to 138, but the overall chart structure remains weak. So I wouldn't suggest him to hold for a long. As of now, hold for a levels of around 138, 140, but around those levels, try to exit your positions.
Got the view, Rajesh. But another caller coming in from Bengaluru. Anurag is dialing for a stock query. Anurag, good afternoon. Welcome to Ask Profit. What's your query?
Thank you. Good afternoon. This is Arunab Singh here. My query is regarding TTK Prestige. I bought 10 shares at 1,028 from December 2021.
Okay.
So I wanted to know what should I do with those shares because I'm in a loss at the moment. And it has been consistently down till it hasn't reached my level yet.
Yeah.
So can you please advise what should I do with those shares? Should I sell them? Should I hold them? Or is there any other advice that I can be given?
Got it, Anurag. Well, let me take first because you've been holding it for the last almost 5 years now. So let me take a view from Prashant. Prashant, on TTK Prestige, Is it that there is a chance of it coming back to where Anurag has bought it, almost 1,000 odd rupees, or what would you recommend? Is it advisable to probably buy right now, average out, or should he just continue to hold it, and what would you recommend?
I think it's a better way to exit this point of time, and I think the price of what he has bought would be difficult for me to ever analyze to double from the current levels, considering the high competition, the way TTK Prestige is into. So if he would like to take a risk and hold it for some time, I think 600, 650 can be a level where can we see some kind of bounce again. There should be some kind of earning growth which should be better than expected in terms of street expectations, but looks very difficult with respect to the high competitive business. So for me, it's a clear exit at this point of time. If you want to take risk, I think short term you can take at least for 600, 650 levels.
Okay, all right. So that's the view coming in on TTK Prestige. We've got our next caller. Ravana is calling us from Kochi. Ravana, hi. A very good afternoon to you. I believe you have a query on Suzlon.
Yeah, good afternoon. This is Ramana. Actually, I'm holding Suzlon Energy 7,000 shares at the price of 8 rupees. Could you please advise, shall I hold this stock? Shall I average it? Because it went 86, then it came down to 45.
Okay, first of all, Ramana, I mean, really appreciate that you spotted the counter at that price point, and you've been a patient investor and you've continued to hold it and sitting on profits of around 2.8 lakh rupees. Prashant, I'll come to you with this question. Is it time to book partial profits? What would you recommend?
I think yes, book some partial profits and look for some higher gains up to 55 rupees in the very short medium term. So 55 can be another level where he can again have some kind of additional partial booking profit of those levels, and rest 50% he can hold it for the level where it has earlier went in last year, like 70, 75. So overall, the story of the wind energy still looks good. Government needs such kind of alternative energies which can be support their demand and supply. But obviously, yes, be due to some global issues and be due to some kind of export opportunities which are under pressure due to this tariff war. So I think that was a clear indication of downside. But now I think the uncertainty is very clear and the visibility of the long-term growth is still open. So, but yes, there should be some kind of partial booking profit at this point of time.
Got you, Prashant. But viewers, time for the rapid fire round on this edition of Fast Profit. Prashant as well as Rajesh, keep your answers on buy, sell and hold so that we can take as many queries as possible in the next 3 minutes. This one's on AU Small Finance Bank. Vignesh is asking that if he should continue holding his 63 shares, Prashant. He's bought it at 706.
I think book profits.
Okay, Vedanta is the next one. 2,000 shares bought at the level of 290. Should I hold or sell? Rajesh, your view?
Book profits.
The next one is on ICICI AMC. Actually, Rajesh, let me take this question with Prashant because he wants to enter this particular counter. He wants to invest 2 lakh rupees. Should he do that or buy HDFC AMC instead?
Both stocks at the same time.
Okay, the next one is from China, who's writing us from Andhra Pradesh, asking about the best NBFC stock that she can go ahead and invest into for the next 3 years. Prashant, your pick?
I think Bajaj Finance should be the one stock one should focus
on. Godfrey Phillips bought at 3109 and she's currently sitting on a loss because of the increases. So Prashant, should she continue to hold?
I think exit should be the best offer.
Okay, Rajesh Exports is the next one. Charan from Bengaluru has bought at the levels of 408. 318 is the quantity. Rajesh, should he continue to hold?
Hold for a bounce back, expecting somewhere around 300 levels.
IDBI bought at 115. Rajesh, should she continue to hold for the next few months?
I didn't get the
IDBI Bank.
Yeah, definitely hold on to it.
Okay, the next one is Hoodco. The viewer has been holding it and wants to know if you can continue to hold it for the next 15 odd months. Prashant, your view?
Yeah.
Ather Industries, we did take a fundamental view, but Rajesh, is a good time to buy into this counter right now is what Shrikant is asking.
Yeah, can buy. We are expecting to move back towards strong upside is expected, so we'll add on to it.
Econ International is the next one. From a short to medium term perspective, exit or hold? Richa is asking this question. Rajesh, your view?
Yes, hold on to it.
Action Construction Equipment, Prashant, the results are due today. Our viewer actually Kamlesh has bought at 958. Can you recommend him to continue holding and anything he needs to watch out for from the results?
I think yes, continue to hold. I think there should be a good upside up to 1,000.
The next one is on LG Electronics. Naveen from Hyderabad is holding 39 shares. Wants to know if it can continue to hold from a short-term perspective. Not enough data on the charts, but Prashant, your view?
Yes, hold on for short-term. It's 600 target.
Devyani bought at 191, Prashant, by our viewer Mohan. Should he continue to hold?
No, exit.
Okay, Genus Power is the next one. Prajwal Gowda wants to know if you can continue to hold this from long-term perspective. Prashant, your view?
Hold on for long time.
Dr. Bharat from Iluru is asking if you should. What is the future of Endurance Tech? I think he wants to enter this counter. Prashant, what would you recommend?
Long term, yes, buy at this point of time.
Office Solutions is the next one. Siva from Hyderabad wants to know if you can continue to hold this from a short-term perspective. Rajesh, your view?
I'm not tracking this counter.
Okay, all right. So that's. But quickly, Prashant, your view on this one? Office Solutions.
I think just continue to hold.
All right. Okay. So that's the view coming in on Office Solutions. But Prashant as well as Rajesh, thank you for helping us answer all those queries. With that, viewers, completely out of time on this afternoon edition of Ask Profit. But do stay tuned. India Market Close up next.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म, एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real news, tech that you can actually use.
So should your tech show.
Ready, now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
फिल्म है, बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या?
It may not be the 1,000+ point gain that the initial open had suggested, but you'll take it. Close to 700-point gain for the Nifty 50, and we're holding around this mark. This is India market close. My name is Alex Matthew. With me is Sharad Dubey and Hiral Dadia, and we'll take you through the next 1 hour of trade. What a day it's been for the Indian equity markets and for the bulls and for the long-term equity holders in India. Let's take a look at the heat map for the Nifty 50. And all of this is on account of the trade deal being signed between India and the US. Adani Enterprises, Adani Ports, the top gainers on the Nifty 50, a host of financial names up and about. Remember, this is not just the external facing companies and sectors that are set to benefit. You will also have allied sectors that benefit. So to that extent, one can assume that Bajaj Finance, Shriram Finance will also benefit. Indigo, a bunch of these stocks. In fact, the only stock in the red and just about in the red is Nestle. Most stocks trading in the green. And you know what? The broader markets also are telling a similar story where you have close to 3% or thereabouts gains for the mid-cap index, around the same mark for the small-cap index as well, 3% or thereabouts. And as a result of all of that, the advanced decline ratio and the market breadth will be a very pretty picture. 56 is the number at the bottom, and it's more or less at the widest point of the day today. But there is only one story. It's not about individual stocks today. It is about the story of India and US signing a trade deal that's been in the works for some time. Hiral, what are you seeing on the sectoral front?
It's very interesting, Alex, because today the question was whether we should have a sector of the day, a stock of the day, a bull versus bear, but I think nothing holds water at this hour on the back of the father of all deals and the mother of all deals that have been signed in the last couple of days. Let's just quickly pull up the sectoral indices. Everything that you see on your screen is in the green. Gains are in that range of 2.5-3% from the auto pack to real estate, which is up really 5%. So that's the kind of range that you're seeing in terms of individual sectors as well. There's not a single sector which is taking a beating. If you see in terms of individual counters, names like Wellspun Living, 19% up move, Apar Industries, KPR Mills, Aarti Industries, PCBL, LT Foods, LG Equipment, Trident, all of these are up in that range of almost 12 to 19 to 20% in trade. What's losing out? A PB Fintech. Now the earnings have been spectacular for this number. Fundraising plan for a inorganic growth, an acquisition. I think that's what the street is not taking in the positive stride, and that's the reason why you're seeing pressure there. Aegis Vopak trading under pressure. Varun Beverages also down in trade on the back of the set of numbers that have been reported in the third quarter. The expectation itself was weak, and that Soumit Satkar had got to us in our cover as well, that there are sell flows coming in on the HNI desk on the back of an expectation of a weak Q3, and that's what has come in there. Chennai Petro, Intellect Design, Global Health, Avaz, a few of the other names which are seeing some bit of pressure in today's session. But the overall mood, absolutely positive. The question from here on is going to be how, I'm very excited, in fact, Sharad, with regards to what the FIs are going to do today. And that's the conversation and that's that number that I'm waiting out for.
Yeah, that 88 number was there. It was unchanged for last 3 trading sessions, but hopefully we can get that, in a lower numbers as well. But it's a Dhurandhar deal. That's what Tamanna has coined it. And interesting it is. But the only people who haven't made money are going to be the call writers. And really they have taken to the cleaners. But how the market is shaping up, and you must be wondering that the market was a very significant gap up. And why is it not holding up? There's a reason for it. Today is the Nifty expiry is there. And that's why there is larger up moves are being limited. And largely, we might see some fresh positions tomorrow as well. So that's something which the street is very bullish on traders, especially the options data is suggesting a positive momentum, but do not expect a big move in the last 60 minutes. Or kind of a profit booking might come in, but it's a very less chance. India VIX is down 5%. That's another reason for that bigger moves not coming in. It's near the 13 levels. Short covering likely across the large caps. That's something which you'll be looking at the FNO data for. The delivery base buying is something which the street is bullish on. Rupee has strengthening and it's keeping on strengthening. Some RBI interventions are also coming forward. Bond yields are dipping and the broader indices, Alex also pointed out, 10:1 ratio in the favor of the bulls, the SMIDs, the small caps and the mid caps. That's where the action is coming. So overall, it is very strong. The Nifty all-time high levels, it's near that levels. We are, especially in the opening, the 26,373. The key support, of course, I'm talking about the larger ones. It's in the 25,000 range. Then the short-term one, this goes up. Nifty Bank all-time high levels. That also comes in at roughly 61,764. So overall, the setup looks good for the market, but some follow-on buying might come after the Nifty expiry also goes.
That's what we should be watching out for. Thank you, Sharad, for that. That following buying is something which is absolutely crucial from here on. But as Sharad mentioned that this is a Dhurandhar deal which has been sealed and the last street has been sharing it as well. What is that sectoral impact for a bunch of sectors? Let's listen into the word coming in from the likes of a Bharat Forge to a Pearl Global to a Ather Industries as well as Keytech's Garments.
If you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, But India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
Who are importing from India, we are subject to pay this additional 25% of penalty tariff. For competition who are mainly in 19 to 20% range, we will a reciprocal tariff of 25%. So that will give almost a different tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on, now this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
This was something that the industry long awaited. And it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
So how quickly can the rain clouds shift away and the sun come through? Well, you heard from the managements of all of these companies that are external facing, and they seem to be saying or singing, "Here comes the sun." Let's go across to Kunal Rambia just to find out what key levels you should watch out for on the key indices that we're tracking today. Kunal, good afternoon rather to you, and thanks so much for taking the time. What Sharad was pointing out just a short while back, you have the Nifty expiry playing through. Is that what is keeping us curtailed at this point?
Good afternoon, Alex, and thanks for having me on the show. So yes, as far as Nifty is concerned, yes, today is the expiry, and we witnessed such a big announcement coming overnight, right before the expiry day itself. And today being an expiry, it's obviously difficult for the Nifty to show us the new highs and sustain at that level. And the level where we actually halted was the level which we witnessed during the beginning of December, which was 26,350. Similar high was seen somewhere on 5th Jan, 26,350, and today's high is almost at the same level. So the key levels to watch out will be 26,350 on the upper side, which will act as a strong resistance for the time to come. At the same time, since witnessing strong support at 25,575, I think that's the level to watch out as a support for now. This range-bound movement is likely to continue for next 10 to 15 days before we see a new rally coming in.
And Kunal, what about your picks here? This market, anything you're touching, that's going up in the trade, export, and literally Nifty 50, 49 constituents are in the green. Will be difficult to pick, but for a trading or a positional point of view, if what would be your two technical picks?
See, Sharad, again, going a bit, defensive. So as far as the announcement is concerned, but the counter which I like the most at this point in time, and which we are discussing on our channel since 15-20 days, is MRPL. Again, this counter is right now trading at 179, 180. I think this counter has the potential to show us the levels of 225, 230. So with the stop of 170, one can certainly initiate a buy on MRPL. The second counter which I like again the most, but is Advanced Agro Life. Now this counter is in the range of 120 to 135. Today it made a high of 132. Right now it's trading at 129. So I think with the stop of 120, this counter can also be looked into from the short-term to mid-term perspective. The counter name is Advanced Agro Life.
Okay, Advanced Agro Life is what you're watching out for. Let me also get in Sunny Agarwal. Sunny, welcome to the show. Always a pleasure to speak to you. We're talking of a Durandar deal that has been signed. Multiple sectors that are seeing, maximum gains in today's session. Some locked in upper circuits, so I think investors don't have an opportunity to even look at it to enter. But from a fundamental perspective, if you have to look at textiles, if you have to look at, seafood exports or auto ank, which is the best bet that you have, which, in which a stock has been beaten down, valuations are also reasonable, and the opportunities come their way now?
Good afternoon, Hiral, and thanks for having me on the show. I think, definitely today we have seen a very good recovery in textile and seafood related companies. But what I feel is that since we are talking about the sector which is beaten down, where we feel that earnings continue to look better going forward, auto ancillary seems to be relatively well placed. So in fact, during our budget report also, we recommended Belrise Industry as one of the stock to buy post-budget. So I think auto ants, so all the companies which are supplying products to two-wheeler passenger vehicle segment, as well as tractor segment, those all companies we feel will continue to deliver a healthy earning growth for going forward. A case in point, SGS Enterprises have reported a very good set of numbers. Precol has reported a very good set of number. Lumax, which predominantly supplies product to Mahindra and Mahindra, continue to look pretty good. Swaraj Engine, we feel again a subsidiary of Mahindra and Mahindra, where although the December quarter was slightly muted in terms of earning growth, but we feel the valuations are pretty reasonable. VSC Tiller again has reported a very strong set of volume growth even for the month of Jan. So we feel VSC Tiller post corrections looked attractive. So I think auto ants is a sweet spot to be in. Obviously driven by domestic demand, and at the same time pushed by global OEMs to make India as an export hub. So obviously road trigger as far as all these auto ants companies are concerned.
Okay. All right. So we've talked about a bunch of these stocks. Let me ask about the metal plays? Because, Kunal, in the recent past, the kind of volatility that you've seen in the underlying commodities has resulted in this entire basket going through a state of flux. So if you are Braveheart, and if you would like to trade these, then what is the advice that you would have?
See, again, Alex, to have the brave heart, it's very important to actually, ride the rally. I mean, as far as Hindustan Copper is concerned, I think we saw the first breakout somewhere near to 375. Now, if you end up buying somewhere at 700 levels, then obviously it's going to be a scary time, right? But at the same time, what I advise to all our viewers on the regular base, on the regular discussion of ours is keep trailing the stop losses and take the opportunity during such panic situations to add the positions. Now, just let's take an example of Hindustan Copper, which is trading at 622. I think the good bottom we saw was day before yesterday near to 585. That can be the good level to keep as the stop loss and initiate the new trades. At the same time, if someone is already holding, that should be the trailing stop loss. We are not going to able to capture the top and the bottom, but I think this is the way to play with the metal. Trend is absolutely intact. Stay invested with this sector.
Right. So that's the view on the metal space where you've seen tremendous pressure, but the rebound took place in the underlying overnight and today, as a result of which you're seeing the basket as a whole do particularly well. But let's focus in on the results space and speak about Chalet Hotels. And we've got Mahima joining in to speak to the management and find out how it was in the outlook going forward as well. Mahima?
Right, so Alex, overall healthy growth in terms of where both revenue and EBITDA growth stood. Hospitality business is where the robust growth is coming in from, and operationally also this quarter looked very strong. Now to understand, more intricacies of how results have been like in Q3 and how Q4 is shaping up, we're joined by Shwetank Singh, MD and CEO of Chalet Hotels, joining us now. Shwetank, my first question to you is with regards to your revenue per available room. That growth largely this quarter has come in from your average room rate increase, but occupancy is seen a slight dipping. Do you expect this trend to continue?
So whichever way you look at, the macros are very heavily in favor of the industry, and so the general macros of the country are brilliant. So what is happening essentially is that growth is coming from all quarters. Not only is the free individual traveler traveling more because as travel and tourism becomes less discretionary and more a way of life, that means more shorter trips, longer weekends, etc., and therefore occupancy is being boosted across the country in most leisure destinations. The fact that there is an improvement in infrastructure overall, and the recently concluded budget, we saw a 12 lakh crore investment coming into infrastructure, so that should further boost the infrastructure and therefore add to this trend. So that's helpful as well. If we look at the corporate earnings throughout the country, in general, the corporate earnings are an upward trend, and there is a direct correlation between corporate earnings and MICE travel. So that's on the upward trend as well. And socials in India will never go out of fashion. So the big fat Indian wedding stays where it is. So overall, this trend is set to continue. The recent, of course, the clearing up of the trade wars is also very helpful. Because that would mean more international traveler coming through. And India being such a strong economy, India is being discussed in most boardrooms of companies of any significance. Therefore, that should be a positive overall. So hence, we don't see any slowdown in the trends, and we expect the industry to continue to year on year. And the final fact that is very helpful is that the supply is still behind the demand. And therefore, arbitrage is also helpful.
Okay, got it. Shwetank, MMR markets, they've seen a good growth of 25%. Again, here it was largely led by our ARR increase, but and this growth is largely led by Bangalore as well as Hyderabad and Pune. Do you see a structural shift here?
No, so MMR has been our mainstay for a long time, and it continues to be a very important part of our portfolio. What's been interesting to note is that we have, for this particular quarter, beaten the larger MMR market quite significantly, and also outperformed most of our competitors in our comp set, despite the market being very challenging, and we having our own challenges with construction going on, especially at Powai. So that's been very interesting to note. The larger MMR region, the beyond the MMR region, what's contributing to the portfolio is also very interesting to note, because it's always been a part of our larger strategy to diversify both geographically as well as between leisure and business segments. So that was a conscious call that the company had taken, and that's beginning to bear its fruit. The south of the country has been very strong for the market as well as for us, and that's coming through. But most importantly, even our leisure destinations are starting to sort of kick up the performance to where it was expected to be. And with Athiva, especially in Khandala, stabilizing, and the additional 130 rooms stabilizing in Bangalore, we expect this growth trend to continue and for regions beyond MMR to contribute significantly to our portfolio.
Got it. So Shwetank, then as inventory additions accelerate for you, will strategy tilt more towards protecting your occupancy, or will it be towards maximizing your ARR?
So look, this is a difficult question to answer, because typically these trends tend to be in direct correlation to the market that you are in, and more specifically the micro market that you are in. So the market is what dictates this. But at the end of the day, we have to be cognizant that it is the RevPAR that drives revenue, which is a multiplier of occupancy and ADR. And we normally tend to reflect the market, but outbeat the market on that particular metric. Case in point being Bangalore today. If you see, our ADR growth is upward of 25-27%, whereas the rest of the market would be around 18-20%. So that's where we have taken an ADR strategy. But some of our resorts have still not stabilized, and the occupancies are below what we expect them to be. And if one of our resorts is today in the late 40s and we expect it to stabilize at 60-65%, then we will take occupancy route. RevPAR drives revenue.
Okay, Shwetank, got that view. And back to you, Alex, in the studio. I think it's been a good quarter, and that's reflected in the stock as well.
Thanks so much for that, Mahima. Interesting conversation that you had with the management of Chalet Hotels. Let's talk about Adani Enterprises. The results have been declared, and the stock continuing to trade at very close to the high point of the day. Profit number has come through, and this is something that you should watch out for. 5,627 is the net profit that has come through in the quarter, compared with 50 exceptional item. It is a one-time gain on account of the Wilmar sale, right?
That amount is more than 5,500.
So 5,526, I believe, or thereabouts, is what you have gotten, or very close to that mark. Over 5,000 crore is what you've gotten on account of the sale of that stake.
Right. Sunny, I want to get your views on this. Adani Enterprises, a strong set of operational numbers coming in, and today also the stock up almost 11% in the trade. How are you viewing the Adani Enterprises and Adani group of stocks?
So coming to Adani Enterprise again, Sharad, I need to delve into what has happened into the various segments. But definitely it seems that if I look into the new businesses, I think the Navi Mumbai airport has turned operational. So that should start contributing, and that would have contributed also during this quarter. So that is something which I look forward to. Again, their wind turbine capacity there, we have seen some expansion that can lead to some addition. I think on infra also we have seen a lot of new projects going on stream. So to be very honest, I need to go through the presentation and let's see which sectors have contributed. But broadly, prima facie looks like, as discussed earlier, stake sale in AWL would have led to an extraordinary gain this time at a console level. But having said that, I think long term, anyway, the view continue to remain constructive as we see many new businesses being incubated in Adani Enterprises, and the value locking is something which may come up in the next 3 to 4 years. So that's definitely can add a lot of shareholder value in medium to long term. Apart from Adani Enterprises, I think Adani Ports and cement business, especially ACC, looks relatively well placed when it comes to cash flow and earning growth potential. Adani Port, in fact, today reported a very good set of numbers. So backed by a very robust volume growth. So Adani Ports continue to remain our top pick among the Adani group. And Cement Pack also have reported muted number during this quarter, but seems that next year will be relatively better, wherein the industry will post volume growth of 6 to 7%, and backed by a shift in power towards the renewable energy that is leading to a cost saving as far as power and fuel cost is concerned. So overall, industry should move forward in terms of EBITDA per ton as we go into FY27. So within Adani Pack, ACC and Ambuja both looks well placed to deliver a healthier growth.
Okay, all right. By the way, standard disclaimers here. NDTV Profit is part of the NDTV group, which is owned by the AMG Media Networks, which is part of the Adani group. But quite a bit of action in the Adani group of stocks today. Right. Of course, earlier in the day, Sharad and Hiral, we had Adani Ports results, both the top line as well as the bottom line growing by over 20%. The data coming through on the cargo handling as well, the latest data strong.
That's also very strong.
Double-digit growth, right?
Yes, 12% year on year. So that's a very strong. And a lot of folks where actually the asset-heavy nature is there of Adani Ports. So a lot of bullish calls are coming in the technical space as well.
Let's find out what Kunal Rambia has to say about the list of stocks, because they're all up and about today. Kunal, would you initiate at these levels for any one of these stocks?
See, Alex, honestly speaking, Adani Port has again reached the previous high of 1525, so not really comfortable initiating a fresh position on this. But Adani Enterprise is looking good to me only because this counter has actually held on to the levels of 2100 from May 2023 till January 2026. Recently, last 15-20 days, counter declined below that level, but it has reclaimed that level. So I think the risk-reward ratio is favorable on Adani Enterprise. So with the stop of 2100 or say 2050, one can definitely initiate a buy on this, and the targets can be 2400.
Okay, so that's with regards to where Adani Enterprises goes as well. Now, a couple of stocks that we should be discussing as well. I mean, it's going to be a quick rapid fire that I'm going to take with Kunal Rambia. Kunal, Transrail Lighting, that stock is up nearly 9%. Again, this is on the back of Q3 numbers. They do see some benefits when it comes to the US markets as well. With a 9.5% up move, would you still be a buyer?
No, it's still making a lower top, lower bottom formation. I'll wait for the follow through buying. Otherwise, it's an exit opportunity. Buying above 560 would make sense.
Okay, so that's Transrail Lighting. What about a Varun Beverages? I mean, a sharp downtick on the back of a weak Q3 number is what we've seen. And this is on the back of reduction of purchases of stock in trade. And the finance cost reduction is what has led to a profit beat. But clearly, there is selling pressure. What are charts indicating?
Again, sideways consolidating counter since almost a year. Support is at 440, resistance at 520. If it reaches near 440, we'll have to wait for the consolidation to initiate the buy.
Next one, PB Fintech, QIP announcement coming in, and of course earnings was also there, but street not liking the fundraise or the inorganic opportunity. Mention your views on that, Kunal.
I think, Sharad, this can show us the levels of 1320. So avoid as of now. If someone wants to short, can short with the stop loss 1525.
It's a short candidate, PB Fintech. Sirma SGS, another stock EMS because after budget and a strong numbers also. Kunal, your view?
Sideways consolidating counter, but the uptick was really very strong. Today's high is a strong resistance. Any tick above 870 can be a buy with the target of 925, 930.
Okay, and specifically in the auto ank space, there are quite a few buzzers. Anything that you're spotting that is interesting there?
I'm very comfortable with Tata Motors passenger vehicle actually very closely. I think this uptick which we have seen in the counter can remain for a longer period of time. So with the stop loss of 350, it's a buy, and the targets can be as high as 450 to 475. I'm talking of next 2 to 3 months. So watch out for this counter. It can be a good derivative counter also. Long futures and short strategy can be a good strategy on this.
Okay, but do remember that Ramkrishna Forging, Sona BLW Forge, these are all companies that have exposure to the US market and all of that. We have to slip into a very quick break. We've got more stocks to talk about, and we have to figure where things settle at the end of today's trading session. Do stay tuned for that.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey says my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम।
Welcome back to India Market Close on NDTV Profit. Now, shifting focus slightly from the trade deal. I know all of us don't want to, but we have to. Corona Remedies has reported numbers. Let's quickly pull up that stock and see what the counter is doing in trade, because margins have seen some bit of an expansion. EBITDA is up around 19%. Profits 8.5%, 2.5% up move is what you're seeing in terms of the stock as well. In fact, it's a strong set of numbers. It's mainly the profit number, which has seen a mild dip of around 8% coming in there. Bhavin Bhagat, Chief Financial Officer at Corona Remedies, joins in. Bhavin, welcome to the show and always a pleasure to speak to you as well. This is Hiral on this side. My question coming to you is the growth that has come in this time around. What does that tell you for the full year going ahead? And I know you don't have exposure when it comes to the US markets, but Europe is something that you're exploring big time. So with the EU FTA coming in, what's that fillip that you're seeing overall from Q4 to FY27 perspective, taking cues from what you've reported in the third quarter?
Thank you so much, Hiral. First of all, very good afternoon to you. And thank you so much for inviting me over here. I would like to brief you about the numbers, what you mentioned, that what we have given endeavor to the investors at large, that our revenue will grow by 15% and the profit after tax will grow by 20% on a year-on-year basis in coming 3 to 4 years down the line. Now, you asked about the question about the EU GMP approval and the EU Philip, what we are going to have in our kitty. Would like to tell you that yes, our dossiers are being filed. We are in the process of getting the EU approval. But having said that, our domestic business will contribute 96% or 95% in coming year, that is FY27. And having said that, our EU revenues will start after 2 to 3 years down the line.
Okay. So, Bhavin, if you have to look at FY26 and the newly compliant international regions that you're looking at as well, what percentage of your revenues will start coming in from the international market in the fourth quarter, if any, and how much are you targeting in FY27?
So right now, as far as FY26 is concerned, we have targeted almost 4% of our total revenue, which will be coming from the international markets. But if you ask me about FY27, it would be in the line of 4 to 5% of the total revenue will be coming from the international markets. Because as I mentioned, that our real exports will start after 2 to 3 years down the line, because our products and dossiers are in filing stage as far as the EU registration is concerned. And recently, we got an EU approval from the 5 countries, which will open the 25 billion market in coming years down the line for us.
And Bhavin, when it comes to utilizations, your Bhaila plant has received international certifications as well. So what is the current capacity utilization? And are there any further plans when it comes to CAPEX for FY27?
Yes, our current capacity utilization is 95% as far as the Ahmedabad Bhaila plant is concerned. And as far as the additional capacity is concerned, we have already unlocked 40% additional capacity by expanding 600 kg line into it. We will further will meet our gaps from the revenue side for coming 1 to 2 years down the line.
So good plans coming in there, lots to watch out for. Thank you, Bhavin, so much for joining in. Always a pleasure to speak to you as well. So that's the management of Corona Remedies highlighting their plans going ahead. And what's led to this growth, the stock also trading at the day's highest levels. Let's also get it, Ajit Mishra, SVP Research at Religare Broking, and we do have Sunny Agarwal. Ajit, welcome to the show and always a pleasure to speak to you here on the side. Your view when it comes to Corona Remedies, and along with this, you're seeing some benefits coming in for the pharma pack also in today's session. Any topics that you have there?
Yeah, good afternoon, Hiral. So yes, we are seeing recovery across the board, and Corona Remedies recent listing. But as the chart suggests that the consolidation which the stock was currently experiencing, possibly we are set for the next leg of the up move, which could help the stock to inch towards record high zones. So one can continue to stay put. 1430 is what we are seeing as an immediate base. With that as a stop loss, one can continue to hold. Otherwise, in the pharma basket, we are seeing like stock like Divis, Dr. Reddy, wherein we are seeing strength. But at the same time, the momentum is missing here. So in case if somebody is accumulating them, then it's fine. But for the short-term momentum, banking, auto, and select counters from the energy basket is something that one should prefer.
Okay. All right. So those are the stocks that you should watch out for. By the way, we've all been searching for details of this trade deal that has been announced. And NDTV has picked up those details. In fact, Shiv Arur of NDTV has picked up that there will be no compromise on sensitive sectors in agriculture and dairy, which have been protected so far. They will continue to be shielded. Here's that report.
So top government sources have just told NDTV that there will be absolutely zero compromise on the interests of farmers, that the sensitive sectors of dairy and agriculture will continue to be completely protected. Market prices will dictate where India purchases its energy from. Very interestingly, they also tell me that India is committed to purchasing oil from non-sanctioned entities. So that is going to be a very, very big takeaway from the expected statement that's going to come out from the government very shortly, either today or tomorrow. Also, there's been a lot of talk over this $500 billion figure, and my sources explained to me that given how things are currently at about $80 billion in terms of bilateral goods and services trade between the two countries, a 5x or a 6x of that over the next few years will finally translate into the $500 billion figure that Trump just kind of dropped in his initial statement. Obviously, there are still many unanswered questions, but the critical points of farmer interests, agriculture and dairy continuing to be protected, India saying people interests will dictate where it buys its energy and oil from, and that it is open and committed to buying oil from non-sanctioned entities, potentially even Venezuela and elsewhere, make this the very, very big takeaways from what we're expecting to see in the statement. So a little additional understanding as far as the complexion and shape and contours of this trade deal, much more expected in the hours ahead.
Thanks a lot, Shiv, for that. And yes, we will be tracking the more developments coming in the India and US trade deal as well. But speaking about the strength of the deal coming in and the impact on the markets, we caught up with Gautam Duggar, the director and the head of research for institutional equities at Motilal Oswal Financial Services, for the market strategy as India and US sign this trade historic deal. Listen in. Gautam, now the leverage comes back to India. Now what happens? Overall macro picture, what changes now?
Hi, thanks for having me. So India's macro were anyways very resilient. I mean, we have been very strong on the macro front for some time now, growth, inflation, twin deficits, the way government has consolidated on the fiscal front over the last 3 years. Interest rates have come off. So I think macros were anyways very solid. This deal adds to the heft now because this was one missing piece. India was getting singled out on the trade front given the absence of deal with US. Now that in a week's time we've done the deal with both European Union and US, and on the US front, we have moved from the most tariff nation to almost the lowest tariff nation. So clearly, this removes a big overhang for the markets, not just equity, but also the currency markets, in my view. Second, I would treat this event more as an allocation event for global investors because the global investors have been underweight on India of late, especially the ones who manage regional money, the kind of underperformance that India has seen in the last 15, 16 months. And the way other markets outperformed us by a margin of 30 to 40%, there was absolutely lack of interest to look at India, given that our earnings had also slowed. So now the picture changes, changes for the better and substantially better, because now we have corporate earnings also coming back. Currency will also stabilize and recover a bit. On top of that, the headwinds because of the deal on both stock market front, economy front, the jobs front, that dissipates. So from that angle, I think this is going to lead to a lot of reallocation in the portfolios, at least at the regional investors' portfolios level.
Yes, so there is going to be a reallocation, but let's ask about the sectors also, especially the export-facing sectors, like textile, auto, ancillaries. Which are the sectors which are going to benefit a lot, and where do you see the risk-reward ratio favorable for the investors to enter now?
So look, purely on account of this trade deal, not many things changes from a bottom-up point of view because the trade deal has relevance for very few sectors which are smaller in size for the market. So you have textiles, something related to gems and jewelry, something related to auto hangs, and some durables and EMS here and there. but none of them are very big and material from a point of view of stock market indices. What, however, changes is the kind of the allocation angle that we just spoke about. Some of the bigger sectors also come into the play now. So financials, which is the most reasonably priced on risk versus reward, and not just banks, even NBFC, even the capital market oriented names, we are quite positive out there on PSU banks, NBFCs, capital market theme. I think even consumer discretionary, we are very positive out there. We are underweight on consumer staples. In fact, we have a zero weight on consumer staple. Some of the sectors which benefit indirectly from this deal, I would reckon technology will come right up there, where we have changed the stance from underweight to overweight a couple of months back. And then there are a host of bottom-up mid-cap ideas which have been beaten down for one or the other reason. I think wherever you are seeing strong earnings delivery, market is ignoring even the stocks which are delivering good earnings. Now I think the picture can change out there, and you will have plethora of ideas to work with. The 15 months of consolidation has ensured that a lot of froth, even in the mid and small cap indices, has gone away. Not for a moment I'm implying that they are cheap. They're still expensive, with mid cap at 27 PE and small cap index at about 23 PE. But the froth which was there in September 24 and early part of 2025, a lot of that has moderated. So you have enough ideas when you look at portfolio construction from a bottom-up perspective.
Right.
We are overweight on auto. We continue to like auto. What does this deal do insofar as portfolio allocation is concerned is that it removes the overhang and stops the derating which we had seen. In fact, on a relative basis, India has never been more cheaper versus the emerging markets.
That's a pretty interesting take on that, and just the request has come in that the Q3, the street was expecting some earning upgrades to come in from Q3, and largely we have seen a lot of good earnings also getting lost in the sell-off. So will we see that Q3 earnings upgrade coming in, or Q4 some of them will get shifted too?
So look, right now we are seeing the pace of earnings downgrade. That intensity has come off substantially in the last 3 quarters. We had put out a note also to that effect a couple of weeks back, and we are seeing that trend continue in third quarter too. Almost 200 companies out of the 355 that we track have declared their numbers till yesterday, and they are bang in line with our estimates at about 13.5% earnings growth. The interesting nuance out there is large caps, after a very long time, are outperforming the mid caps on earnings versus expectations. Not that mid-cap numbers are bad, just that the gap between the large cap and mid-cap earnings growth, which is almost 2x for last year and a half, this particular quarter we are seeing that gap in the growth narrowing in favor of large caps now. And small caps, obviously, they are having a turnaround quarter after 5-6 quarters of earnings decline. But we are still not in earnings upgrade. We are still seeing moderate earnings downgrade. For Nifty, for the 31 companies for which earnings have come in so far, at an aggregate level, we have cut the Nifty earnings estimate by about 0.4, 0.5%.
Yeah, so that's the word coming in terms of Motilal Oswal as well, with regards to what the strategy could be looking like going ahead. Ajit, it's 3:15, and it's going to be interesting with the kind of moves that we've seen today, if there are any BTST, STBT calls for tomorrow.
So, Hiral, we are seeing that stock like Power Grid, Petronet, which are not only holding strong. In fact, in the last couple of sessions, we have seen very strong, buying interest with the volume. So, we expect this resilience to continue. So, for Power Grid, it's currently quoting at 283. So, one can go long even at current levels with 275 as a stop loss and 295, 298 as a target zone. For the Petronet, a similar kind of a structure means almost a 1 year long consolidation phase is ended, and we are set for the next leg of the up move. There could be a bit of a consolidation every now and then, but the overall tone looks positive. So here one can look for positional buying at current levels with 285 as a stop loss, around 320 as a positional targets.
All right. That's important levels to watch out for Petronet LNG. But moving on, Dalal Street has been cheering the landmark India-US deal. But is this momentum likely to sustain? Listen into what market experts had to say about the impact of the deal on the sentiment in the market and the path they are charting out for Dalal Street in the near term.
The balance of payments could look better now. The trade deficit slightly smaller. inflows slightly higher. So on the whole, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive.
This is a celebrating time for all investors and for India as a whole. And it is not only about this US trade deal. It is about the series of events which have happened, including the EU deal, including the budget minus the STT.
This is the best time for even for foreigners to participate in this market. And stocks are mercilessly cheap, जिसको बोलते हैं, especially mid caps and small caps are 40, 50, 60, 70% down. So I think this is the best time for India, and we are again, I think worst is absolutely over. Whatever low index had made in last 3-4 months or whatever, I think that is the final bottom. This is what I feel as of now.
All right, heading back to earnings now, and Adani Ports is gaining in trade after delivering a strong performance in the third quarter. Consolidated revenue soaring as much as 22% on a year-on-year basis. We also spoke about the latest updates on the data front as well, on the cargo handled, and that is looking positive. The EBITDA margins also stood at around very close to that 60% mark. Let's listen into what whole-time Director and Chief Executive Officer Ashwini Gupta had to say about the growth and the path ahead for the company.
Hello, and thanks for allowing me to share APSEZ's Q3 FY26 results. As India's largest and world's fastest growing integrated transport utility, APSEZ has once again demonstrated exceptional performance and continues to build on its legacy of creating shareholder value driven by responsible capital allocation, operational efficiency, and elevated customer experience. During the quarter, APSEZ's revenue grew 22%, driven by growth across all business verticals. Logistics and marine business grew 62% and 91% respectively. International operations crossed the rupees 1,000 crore quarterly milestone, and domestic ports grew in mid-teens. YTD FY26, we continued to gain all India cargo market share, including the highest ever container market share at 45.6%. Importantly, we focused on profitable growth. During the quarter, marine and international ports EBITDA more than doubled, and logistics and domestic ports EBITDA grew 26% and 15% respectively. Driven by all-round EBITDA growth, I am delighted to increase the top end of our original FY26 EBITDA guidance by rupees 800 crores. We have a massive focus on capacity expansion. We recently closed the acquisition of the 50 million ton per annum NQXT Australia terminal. We have multiple initiatives underway across our Indian ports, including rupees 16,000 crore Vizhinjam Phase 2 expansion, liquid and container terminal in Mundra, expansion at Dhamra, Ennore, Kattupalli ports, and new Haldia terminal. We are increasing footprint of our asset-light logistics services to cover more trucking routes and higher international freight forwarding volumes, along with expansion in physical logistics network. Marine is another area of focus where we are adding vessels in the Middle East and Africa waters with definitive customer contracts. While pursuing large-scale expansion, we remain focused on responsible capital allocation and balance sheet strength. During 9 months FY26, we generated healthy operating cash and kept our leverage under check to below 2x. Moody's has revised its outlook on APSEZ to stable from negative while reaffirming its ratings. And moreover, Japan Credit Rating Agency assigned A-/stable rating to APSEZ, a notch above India's sovereign rating. APSEZ continues to set the benchmark for operational and sustainability excellence. Mundra became the first Indian port and among few global ports to handle a very large crude carrier that berthed directly at a jetty. APSEZ became India's first integrated transport utility company to adopt the TNFD framework, which is a global benchmark for responsible infrastructure development. Looking forward, we remain firmly on track to achieve 1 billion metric ton of cargo volume and our FY29 targets of 65,500 crores of revenue and 36,500 crore of EBITDA. I take this opportunity to thank our stakeholders for their invaluable contribution to our growth trajectory. Thank you.
So that's the management talking in terms of Adani Ports and the outlook going ahead. But let's pull up our Varun Beverages on the screens as well and see what that counter is doing in trade. And this is on the way the earnings have panned out. If you see overall, the kind of downtick, 2.5%, it did try making a short recovery, but I think completely failed. What they've said in the con call as well is that with favorable monsoon expected, the demand is expected to be better. Double-digit growth in India is not impossible. Calendar year 2026 will have a much better realization in the African markets as well. And growth at 22 to 23% is what they're looking at. If we maintain, they will be very happy. In March, they will be launching Nimbu's Jeera, and India will not undertake any capex this year. But the numbers on the back of Q3 have been weak. Sunny, your view when it comes to Varun Beverages?
Here we continue to remain constructive on the growth potential of Varun Beverages. Predominantly, if you look at calendar year 25 was impacted by extended monsoon, and that has led to a tepid demand for summer product which Varun Beverages cater to. In addition to that, international business continue to scale at a rapid clip, wherein we believe that on a lower base, international business can continue to deliver a healthy growth. So looking forward to an healthy summer season, and that should augur well for Varun Beverages. Anyway, December quarter is a seasonally weaker quarter. So if you go back into history, December quarter is the seasonally weaker quarter and usually deliver a lower sales and EBITDA number as compared to the remaining 3 quarters. So I think any deep for a medium to long term investor is a good opportunity. We feel the fair value of the business is closer to 580-600 rupees if somebody has got an investment horizon of 12 to 18 months.
Vodafone Idea, that stock is up almost 6%. It's above that 11 mark as well. Ajit, I know it's a bit a risky trade and viewers should exercise caution in this counter, but your views on the technical aspect of Vodafone Idea?
So Sharad, yes, we are seeing bit of a stability, means though the stock is still volatile, like hovering in this 10 to 12.5, 13 range. But of late, we have started seeing bit of a base formation around the short-term averages. So there's a possibility that this time around we might see an attempt of like a breakout about 13 mark and help the stock to inch toward, let's say, 18 to 20 zone. So it's a bit ambitious, but yes, this is what the indications are. So in case if somebody is holding longs, they can continue to stay put. 9.5 should be their stop loss for the positional target of 16 to 18 in the near future.
Now, we are winding down to the end of trade and we have gains of 2.5% or thereabouts for the benchmark Nifty 50. There you go, so 2.6% or thereabouts. But really, there's one asset that is eclipsing this move. Not necessarily in percentage terms, it's not very often that a currency moves in this kind of manner, but we've moved from a peak of very close to 92 rupees to the dollar all the way to very close to 90 rupees to the dollar. And it might actually turn out that this is the biggest single day gain for the rupee against the dollar in history. At least till 2013, we verified that. We'll have to circle back and find out if this is the biggest single day gain ever. But it's par for the course based on what you've seen, because a large part of what was putting pressure on the currency on the downside was the lack of a deal with the US and the pressure on trade. Now, with that having resolved, you have once again the ability for exporters to look at the external sector. There's going to be participation by these exporters. The intervention, and this is a follow-on effect on account of this, it gains significant ahead of the RBI monetary policy and the meet with the Reserve Bank of India governor at the end of the week, is that the intervention by the RBI will necessarily have to reduce, or rather they won't have to intervene as much as they've had to in the past, and that will free up space on the liquidity front. That bodes well for the banking system as a whole as well. So all told, these are positive signs. Also, Sharad, Hiral, from the perspective of foreign institutions looking from the outside in, directionally, and we spoke to a currency expert this morning, he was of the opinion that we could well, over a longer period of time, be heading back to 88. So in a situation
That's
where...
a technical level, correct.
Right, so in a situation where a foreign institutional investor who's been either selling or sitting on the sidelines is looking from the outside in, we're at very close to 90, possibility of heading back to 88, the stage is set for more money to be deployed. It is a good opportunity.
Exactly.
A good opportunity. So I think the flows that will be coming in from the FIs, if they have to consider a move from 90 to 88, is going to be slightly gradual. You're not going to see that immediate influx that's happening into the Indian markets, I think. So that's going to be something that will be considered. And secondly, the granularities in terms of the US deal, EU FTA, which has been signed, everything comes into effect only after a year or something. So it's a 12 to 18 month gestation period coming in there as well. So I think the anticipation that yes, in the next 5-6 months you're going to see that influx, probably that will not be the situation. It'll be coming in bits and pieces in a very slow and steady mode.
But I think a lot of people will heave a sigh of relief to say that at least this selling will abate.
And not only that, Alex, the short covering, the data which comes in, that might also give us some indication as well how things are panning out in the FI space.
Let's go across to Ajit. Ajit, I'm just taking a chance and asking you this. Do you have a view on the currency at all, and are you looking at those levels?
So, Alex, we were the only one who was depreciating against the dollar because if you see the dollar index, we have seen a very sharp correction. And, at the same time, we were seeing that rupee was hovering around 92 and inching towards a newer high every passing day. With this correction, definitely seems like that, the overhang related to this deal is also behind us. So there will be a possibility that we'll gradually see that level which you were referring to, around 88, to be tested in the coming weeks. So yes, possibility of further correction seems much higher.
All right. Thank you very much, Ajit and Sunny, for joining with us and giving both technical and fundamental views over the markets and stocks. But coming to the closing, it's been a great start, and also it has maintained the momentum. Nifty and Nifty Bank both showing a strong growth coming in. Nifty comfortably above the 25,700 mark, and on the other hand, Nifty Bank, that has given almost 1,400 points up move coming in. Look at the advanced decline ratio to see the breadth of how the markets have functioned. And advanced decline ratio is almost 10:1. Let's also point out the stocks in the Nifty index, what has been gaining. Largely export-oriented stocks have been doing well. Adani group of stocks, they are the top gainers also in the index. Adani Enterprises up 10%, Adani Ports up 9%. And you see it's a sea of green here, barring just 3 or 4 names, BEL, Tech Mahindra, SBI Life and Nestle, but nothing much of a concern. Let's look at the sectors where the buying has happened to see where the biggest momentum has been there in the screen. Of course, Realty, that pack has been beaten since last year, but now it's up 5%. Financial services, consumer durables, and you see most of them sectors, or literally all the sectors, are ending in the green today. It's the day of the broader indices as well. Mid caps and small caps, let's have a look, and there's a significant jump coming in Nifty mid cap index. That's up almost 3%, and the small cap index also having a look, that's also up 3%. So that's a major relief to a lot of portfolios which you will be checking today. Also, apart from this, let's talk about the BSE 500 index, the stocks, how they have been moving, and stock specific moves, but a lot of upper circuits are there. You name it, be it the auto ancillaries, the aquaculture stocks, all of them are up in trade. Look at these numbers. Of course, there are some earnings impact also, but that's not relevant right now in the markets. PB Fintech, one of the top losers in the index, that's down almost 7% in the trade. Ather, some profit booking is happening. Varun Beverages, a little bit of weaker side numbers. So earnings impact is coming in a couple of these counters, but it's the day of gains, a very strong support, and rupee. That's also something I'd like to point out. Rupee has posted its biggest intraday strengthening since the data which we have seen since 2013, and look at that, it's near that 90 mark. This is one of the biggest news flows for the day. The Indian rupee, it has outperformed all the major currencies, all the emerging market currencies. So you should be looking at rupee and the expected FPI flows and maybe the FI short covering data in the evening. But let's see what to watch out for tomorrow as well as post-market hours. India's RBI market borrowing auctions come in. Also, apart from this, we'll be seeing a lot of macro data. These are the interim dividends moving ahead. We see these are the stocks which should be in focus, and earnings, that's where the interest will lie. But there are a couple of board meets as well, Devyani and Metropolis, important corporate actions coming in. Two stocks, especially Lenskart, you should be focusing on. The lock-in is coming tomorrow. There might be selling pressure in the early part of the trade. Also, the earnings post-market hours today, of course, Pidilite and Kansai Nerolac, something you should be watching out for. But Bajaj Finance is something which the numbers haven't come yet. We will be tracking that. And for earnings for tomorrow also, largely mid-cap names are there. Apart from that, of course, NHPC is there. So back to the earnings season. But of course, the levels are very strong. That's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Good afternoon, viewers. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. The first news being, let's begin with the top news story of the day. After over a year of negotiations and diplomatic back and forth, the India-US trade deal is sealed. This marks India's fifth trade deal in 12 months. The landmark trade agreement resets one of the world's most important economic relationships. The deal, announced after Prime Minister Narendra Modi and US President Donald Trump concluded months of negotiations, cuts steep American tariffs on Indian goods to 18% and commits India to lowering tariff and non-tariff barriers under a new bilateral trade framework. Washington says New Delhi will halt purchases of Russian crude and increase imports of US energy and technology, while both sides expect stronger flows in farm goods, manufacturing and services. The focus now shifts to implementation milestones, digital trade pilots and deeper coordination in clean energy and critical technologies. Markets make a Dhurandhar comeback as investors salute India-US trade deal. Benchmarks saw a stellar rally as Nifty and Sensex both ended with over 2% gains. Broader markets also rejoiced the trade packed as mid and small cap indices both witnessed strong buying. It was a sea of green across sectors on the back of India-US trade deal. Textiles and shrimp stocks surged to upper circuit today, while IT and auto stocks also saw strong moves of up to 10%. Indian rupee appreciated more than 1.5% at 90.04 to the US dollar after the trade deal ignited investor optimism and spurred foreign inflows. The Indian rupee became the best performing currency in Asia today. With more updates on the India-US trade deal, Prime Minister Narendra Modi said that patience has paid off in securing the long-awaited India-US trade agreement, telling NDA lawmakers in New Delhi that earlier criticism did not deter the government from pursuing steady diplomacy. The Prime Minister said the global order has been shifting in India's favor since the pandemic and stressed the need to push high-quality Indian manufacturing for global markets. And as Washington and New Delhi strengthened trade relations, US President Donald Trump described Prime Minister Narendra Modi as one of his greatest friends. Trump said the United States will immediately reduce its reciprocal tariff on Indian goods from 25% to 18%, adding that India will move to bring its tariffs and non-tariff barriers on American products down to zero. He also said PM Modi has committed to significantly increase purchases of US energy, technology, agriculture and coal, totaling more than $500 billion. Calling the agreement a result of friendship and respect, Trump said the partnership between the two countries will grow even stronger, adding that PM Modi and I are two people who get things done. Meanwhile, senior government officials say they are awaiting full details of the India-US trade deal but expect meaningful benefits once the tariff cuts take effect. DA Secretary Anuradha Thakur said the agreement is the result of constructive dialogue and that its overall impact will become clearer as modalities are shared. Chief Economic Advisor V. Anant Nageswaran said lower US tariffs could provide a significant upside to India's growth outlook, with FY27 expansion now seen closer to 7.4% and a likely boost to capital inflows. Meanwhile, the DFS Secretary M. Nagaraju described the move as a positive development that will help Indian exporters as market access improves further. Trade ties between India and the United States are in focus, of course. A tariff reset means several American imports into India could now get cheaper, including pulses, dairy products and processed foods. Prices of laptops, electronics and other tech hardware may also ease, along with select packaged consumer goods and appliances. On the other side, Indian exporters gain better access to the US, with textiles, jewelry and engineering goods becoming more competitive, a move that could lower costs at home and boost exports abroad. While some goods are set to get cheaper, a few key imports from the US could still remain costly. Steel, aluminium and copper face high US duties, keeping prices elevated. Certain auto components are also likely to stay expensive as tariffs on them remain significant. For businesses relying on these materials, costs may not come down anytime soon. It's a big boost for the auto and auto ancillary space. A strong recovery in US auto demand is driving fresh momentum in forging orders, giving Indian suppliers a healthy tailwind. OEM traction in the US market is picking up steadily, and that's translating into robust long-term order visibility for domestic forging and components manufacturers. With global supply chains stabilizing and US demand accelerating, the outlook for auto and auto ancillaries remains firmly positive. Motilal Oswal sees the Indo-US trade deal as a major positive for Indian markets. Textiles, auto, defense and engineering services are the biggest beneficiaries, while consumer, durables, IT, financials and utilities also gain. Before the deal, India underperformed peers. Foreign investors withdrew billions of dollars and the rupee weakened. Post-deal, FII flows are expected to return. The rupee could recover and Indian exports become more competitive with tariffs dropping sharply. Now, this follows other trade agreements highlighting India's rising global importance. Citi sees the India-US trade deal as a major boost for the economy and markets. Geopolitical risks ease, export risks fall as tariffs move in line with peers, and the China Plus One FDI theme could regain momentum. The deal supports policy effectiveness, improves market sentiment, and may bring foreign inflows while easing short-term pressures on the rupee and interest rates. Equity market gains could also lift urban consumption while reducing concerns over India's perceived tilt towards China. Bank of America calls the India-US trade deal a major breakthrough. US penalties on Indian exports are being rolled back while India will boost imports of American goods. Effective tariffs could fall to the low teens, giving Indian exporters a competitive edge. India will shift away from Russian crude towards US and Venezuelan oil, and BOFA expects this deal to support growth, with RBI likely done cutting rates. The Kremlin says it has not heard any comments from India on plans to stop buying Russian oil, according to spokesman Dmitry Peskov. Russia is closely monitoring developments, including statements from former US President Donald Trump, pardon me for that mistake, and is carefully analyzing all news on the issue. Let's get going with some business updates. Morgan Stanley has upgraded Syrma SGS to overweight, raising its target price sharply from 712 to 992 rupees. The brokerage says Syrma has delivered 4 consecutive quarters of strong, profitable execution, even as many peers in the electronics manufacturing space struggle to sustain growth. With the EMS sector drawing fresh attention post-budget, Morgan Stanley remains cautious on names like Dixon and Tech, but sees Syrma building momentum through consistent performance and operational strength. PB Fintech shares were under pressure today after the board announced it will consider a qualified institutional placement. Despite the market reaction, the company delivered a strong Q3 with core business performance being solid and margins expanding over 650 basis points. Contribution margin and adjusted EBITDA comfortably beat street expectations. Management also signaled an appetite for inorganic international expansion, adding a new strategic layer to the growth story. Transrail Lighting has delivered a mixed set of numbers this Q3. Revenue jumped 32.6% to 1,777 crore rupees from 1,340 crore rupees, and EBITDA rose 28.6% to 208 crore rupees. However, margins saw some pressure. EBITDA margin dipped 36 basis points to 11.73%. Net profit was also higher, up 17.7% at 109.7 crore rupees versus 93.2 crore rupees year on year. So strong growth on the top line, but some margin softness weighs on the overall picture. Adani Defense and Aerospace signs a deal with Italy's Leonardo to build a helicopter manufacturing hub in India. The partnership focuses on production, training, maintenance and support, boosting local aerospace skills. Following Adani's aircraft deal with Embraer, this move aims to make India a center for modern rotorcraft and high-skill jobs. Adani Ports has delivered a strong Q3 performance. Profit is up 21.2% to 3,054 crore rupees compared to 2,520 crore rupees last year. Revenue has surged 21.9% as well to 9,705 crore rupees, while EBITDA has climbed 20.5% to 5,786 crore rupees. The company did take a one-time hit of 146 crore rupees due to labor code changes, bringing operating margin to 59.6%. In key management updates, D. Muthukumaran has stepped down as CFO, and Adani Ports has appointed Sridhar Krishna Menon as the new Chief Financial Officer of the company. Adani Enterprises has posted a blockbuster Q3 with profit jumping multifold. Revenue is up 8.6% to 24,820 crore rupees, while EBITDA has risen 18.6% to 3,641 crore rupees, improving margins to 14.7% from 13.4% earlier. Net profit has surged to 5,627 crore rupees compared with just 57.8 crore rupees last year, powered by a one-time gain of 5,632 crore rupees, which includes 3,946 crore rupees from the sale of its stake in Adani Wilmar. Zydus Wellness has delivered a weak Q3 performance this quarter. The company has reported a net loss of 40 crore rupees, slipping sharply from a profit of 6.4 crore rupees in the same period last year. Revenues, however, more than doubled to 965 crore rupees compared to 462 crore rupees year-on-year. EBITDA came in at 61 crore rupees, up from 14.8 crore rupees, with margins improving to 6.3% versus 3.2% last year. Morgan Stanley maintains an equal weight rating on Coal India with a target price of 390 rupees. The company plans to upgrade executive pay sales, which analysts say is significant for profits. Back pay of around 3,400 crore rupees could hit this year's profit by roughly 9%, while annual employee costs may rise by about 1,000 crore or 2%. Kotak Securities downgrades City Union Bank to sell with a target price of 250 rupees, implying around 16% downside. Analysts say the bank's recent outperformance pushes its valuation above Axis Bank, even though it delivers a lower return on equity. They advise investors to wait for a better entry point. Bajaj Auto reports strong January numbers with total sales up 25% year-on-year at 4.77 lakh units. Domestic sales rise 26% to 2.08 lakh units, while exports grow 25% to 2.15 lakh units. Commercial vehicles see highest jump at 35%, and two-wheelers sales increase 24%, signaling robust demand across segments. Indigo says it is prioritizing efforts to strengthen operational resilience after a major technology glitch disrupted flights and affected travelers recently. The airline's leadership said measures are underway to bolster its systems and prevent similar issues in the future. Indigo also highlighted that most flights have since returned to normal schedules and customer services have been restored. The carrier said it remains focused on reliability as it grows capacity and meets travel demand. Passengers impacted by the disruption are being assisted as per policy. Coal India has revised its executive pay structure, a move expected to cost the company around 3,400 crore rupees through 2026. According to reports, the updated scale will increase compensation for top management and may impact Coal India's overall wage bill in the near term. The company said the revision is intended to align pay with industry standards and retain talent amid a competitive environment. Analysts say the cost hit should be manageable given Coal India's cash flows, but it will keep expenses elevated in the coming quarters. Apple has achieved a record 28% value share in the Indian smartphone market as consumers increasingly shift towards premium devices, according to industry estimates. The milestone reflects strong demand for iPhone models across price segments, even as overall unit sales growth remains competitive. Analysts say the trend indicates a growing preference for higher-end smartphones among Indian buyers, supporting Apple's market positioning. The company's expanding retail footprint and promotional campaigns are seen as helping drive a higher value share. Elon Musk's SpaceX is combining with his artificial intelligence startup xAI in a strategic move ahead of planned mega IPO. Sources familiar with the matter said the deal will fold xAI's AI capabilities, including its Grok chatbot, into SpaceX's broader aerospace and satellite business. The enlarged company is expected to be valued at around $1.25 trillion as it aims to integrate space technology, AI, and communications under one umbrella. People familiar with the discussion said the merger is designed to strengthen SpaceX's financial and technological position before it goes public. Details of timing and structure are still being finalized. OpenAI is reportedly seeking alternatives to NVIDIA's AI chips as it plans for future computing needs, according to people familiar with the matter. Again, the company's leadership is said to be unsatisfied with certain aspects of NVIDIA's roadmap and wants to ensure access to diverse, high-performance hardware for its large-scale models. OpenAI is exploring custom silicon designs and potential partnerships with other chip makers to reduce dependence on a single supplier. The search comes amid broader industry efforts to expand AI infrastructure options and improve supply resilience. On to some important national stories. Air India has started inspections of fuel control switches on its Boeing 787 aircraft, the airline said, as a precautionary safety measure following global concerns over similar issues. The checks cover all 787 Dreamliner jets in its fleet and are being carried out in coordination with the manufacturer's guidelines. The move comes after reports of fuel control anomalies in some aircraft models, prompting operators worldwide to review components. Air India said flight operations are continuing normally and passenger safety remains the top priority for the airline. India's aviation regulator has ordered a special audit of BSR Ventures flying operations after the plane crash that killed Maharashtra Deputy Chief Minister Ajit Pawar. The Directorate General of Civil Aviation, DGCA, said the audit will review the operator's flight safety, maintenance practices and compliance with aviation standards. The move follows the fatal accident and aims to identify any lapses in procedures or oversight. Authorities have already launched an investigation into the cause of the crash, and the special audit is an additional regulatory step. The DGCA said all aspects of the operator's flying activities will be examined. The Supreme Court of India, led by Chief Justice Surya Kant, strongly criticized Meta and its WhatsApp privacy policy during a hearing on an appeal against a penalty related to data sharing practices. The bench said it would not allow the privacy of Indian citizens to be compromised and signaled that global platforms must abide by Indian law or consider exiting the country. The court described the take it or leave it policy as exploitative and unfair to average users. It has issued notice in the case, asked for a response from the government and posted further hearings for next week. Kochi International Airport has rolled out India's first hydrogen-powered passenger buses as part of its efforts to adopt cleaner and greener technologies. The buses will be used to ferry passengers between the terminal and aircraft stands, reducing reliance on fossil fuels and cutting emissions. Airport officials said the move aligns with broader sustainability goals and could pave the way for wider use of hydrogen mobility solutions in Indian aviation. The initiative highlights Kochi Airport's push towards environmentally friendly operations. On to some important international stories now. US President Donald Trump says he is now seeking $1 billion in damages from Harvard University, sharply escalating his feud with the Ivy League school. The move comes after reports claimed his administration had softened its earlier demands. Trump dismissed those reports and accused Harvard of serious wrongdoing, adding that the case would continue until justice is served. Harvard has not publicly responded to the latest demand of Trump. NASA has stopped its Artemis second launch campaign after engineers detected a hydrogen leak during a crucial fueling test of the moon rocket. The team was forced to halt the countdown when sensors showed a persistent leak in the rocket's fuel connection, along with a valve glitch that made the system unsafe to proceed. NASA now says it needs more time to review data and run another rehearsal, pushing the crewed moon mission to March at the earliest. Bill and Hillary Clinton have agreed to testify before the U.S. House Oversight Committee as lawmakers prepare to vote on holding them in contempt of Congress. The agreement comes after months of resisting subpoenas in the investigation linked to Jeffrey Epstein. Now, their lawyers say the Clintons will sit for depositions on mutually agreed dates, hoping this will halt the contempt proceedings. But the committee's chairman says the terms are still unclear and it is not yet certain whether the vote will move ahead. The Rafah crossing between Gaza and Egypt has reopened after nearly 2 years, allowing a small group of Palestinians to return home and the first patients to be evacuated for treatment in Egypt. Ambulances lined up at the border for hours before the gates opened, with only a limited number of people allowed to travel as Israeli and Egyptian authorities continue strict screening. The reopening marks an early step under the ceasefire, but movement remains slow and tightly controlled. Pakistan faces a major setback in its standoff with the ICC as cricket boards around the world make it clear that they will not support selective participation at the T20 World Cup. While Pakistan plays to skip only the India fixture as a form of protest, the ICC has warned of serious consequences, including financial penalties and possible sanctions. Broadcasters, too, have raised concerns given the commercial weight of the India-Pakistan match. The Mumbai police has filed a case against the Dhurandhar film crew for flying a drone without permission in South Mumbai's high-security fort area. The FIR names the film's location manager accused of using a drone during shooting despite strict restrictions in the zone. Police says The crew did not obtain mandatory clearances before operating aerial equipment, leading to immediate intervention and legal action. The teaser of Dhurandhar 2, The Revenge, is out and Ranveer Singh is back in a fierce new avatar. The short clip shows him raining fire on Lyari, taking on the underworld with the swagger and aggression of what he calls a Naya Hindustan. The visuals are darker, sharper and far more intense, setting the tone for a high-octane sequel that hits cinemas this March. And viewers, before we say goodbye, let's take a look at the top story today again, the Dhurandhar India-US trade deal. Dalal Street has been cheering the landmark India-US deal, but is this momentum likely to sustain? Listen in to what market experts had to say to NDTV Profit about the impact of the deal on sentiment in the market and the path that they are charting out for Dalal Street in the near term.
The balance of payments could look better now. The trade deficit slightly smaller, inflow slightly higher. So on the whole, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive.
This is a celebrating time for all investors and for India as a whole. And it is not only about this US trade deal. It is about the series of events which have happened, including the EU deal, including the budget minus the STT.
This is the best time for even for foreigners to participate in this market. And stocks are mercilessly cheap, जिसको बोलते हैं, especially mid caps and small caps are 40, 50, 60, 70% down. So I think this is the best time for India, and we are again, I think worst is absolutely over. Whatever low index had made in last 3-4 months or whatever, I think that is the final bottom. This is what I feel as of now.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
It's a done deal between India and the US. Prime Minister Narendra Modi says trade deal shows patience paid off. President Trump says USA's amazing relationship with India will be even stronger going forward. Ministers congratulate the PM Modi and President Trump. Nitin Gadkari calls it a defining step in India-US economic relationships. Ashwin Vaishnav said it's a win-win deal for both. CEA Anant Nageshwaran tells NDTV Profit that the deal will give a meaningful boost to growth sentiment. Also, DEA and DFS secretaries believe the deal eases global and national uncertainty. Corporates welcome the trade deal. Mahindra Group's Anish Shah says a tariff cut will boost the economic growth momentum in the country. TVS Motors' Sudarshan Venu believes the deal improves India's export competitiveness. Meanwhile, SpiceJet's Ajay Singh calls it a watershed moment for India. Market experts also hailed the deal. NSE CEO Ashish Chauhan says it puts India and the US together, while Kotak AMC's Nilesh Shah believes it removes a hanging sword over rupee equity and rates. Market cheers the India-US trade deal. Benchmarks gain over 2.5%, close after rising 5% intraday. Nifty rallies over 600 points to end above 25,700, while Sensex gains more than 2,000 points. All sectors close in the green. Rupee gains 1.6%, extends its rise to 90 rupees 04 paise against the dollar, makes biggest single-day gain versus the greenback with best performance compared to all major global currencies. Precious metals zoom in trade today. Gold gains over 6% after falling by 4.8% earlier. Silver rebounds to rise as much as 10%, going above $87 per ounce. Hello and welcome. You have joined us on Profit 360. I'm Nisha Podar, and today the big story is the historic India-US deal. And over the next half an hour, we'll tell you all that matters and the huge impact it has had on corporates, economy, markets, rupee, and everything else. So the big story today, the United States and India have finally sealed a long-awaited trade deal. And it comes with a major tariff cut. US President Donald Trump announced the agreement after a call with Prime Minister Narendra Modi. Now, in his post on social media late last night, Trump said the deal will bring down US tariffs on Indian goods from nearly 50% to 18%. Trump went a step further, calling Prime Minister Modi a friend and saying the US will now implement what he described as a reduced reciprocal tariff for India, dropping it from 25% to 18%. He also claimed that as part of this agreement, India would increase its purchase of American oil. And back home, remember, reactions poured in thick and fast at a meeting of NDA's MPS. Well, Prime Minister Modi said that the trade deal has created a positive environment and that patience has finally paid off for India. Commerce and Industry Minister Piyush Goyal also welcomed the agreement. He called it a significant step that would unlock the power of the two large democracies of the world, working together for what he described as has shaped the prosperity of their people, a big diplomatic and economic moment for both the countries, setting the tone for the next phase of India and US trade ties. So that's the big picture today, and we'll have much more on what to really look out for going forward. We are joined by Dheeraj Neem, who's the economist and forex strategist, and also Vivek Kumar, who's an economist at Quant Eco Research. Thank you so much, Vivek and Dheeraj, for joining in. Dheeraj, what does this really mean for India? Historic move there.
Look, I think very frankly, this comes at a very opportune time, especially for the financial markets and the rupee. But let me start with our assessment for the economy first. We had pegged India's FY27 GDP growth at 6.5% below market consensus and below official estimates. And a part of the reason was that we had expected that the US tariffs will stay elevated for most part of this year. So, of course, this is a greatly welcome development from that perspective. And we believe that along with the strong momentum in domestic demand that we have seen in the recent months build up, this actually reduces risks to export performance over FY27, and growth could actually be around 6.8 to 7%, as also the Ministry of Finance projected in the latest budget. So I think it obviously brings India's growth prospects close to potential growth. And at the same time, as we have seen the price action today, it allays some of the concerns about the rupee's further weakness, the pressures that had built up in the system over the last few months, as well as, of course, the equity performance that has shown with a bit of a rebound today that what a good sentiment can do.
This is clearly, as you said, Dheeraj, with all the aspects put forth, where all it has really impacted, it's clearly coming in as the biggest booster shot that India had got, with so many implications across the board when it comes to India's macro, micro, market and everything. Vivek Kumar, rupee, one of the biggest highlights of the day, the strongest performance in 12 years, and also over 1% rise for rupee on a single day is no joke.
Well, absolutely. We've got to appreciate the fact here that rupee was fairly insulated from the macroeconomic side. So you had a growth inflation balance for the economy, which probably not many nations in the world could boast of. And at the same time, our current account gap was fairly curtailed. Despite that, rupee saw the depreciation that it saw in the last 3 quarters. And to a large extent, you could say that there was a tariff-related anxiety which was playing upon capital flows. There was a broader geoeconomic and geopolitical uncertainty which was also impacting your direct investment flows. Now, the tariff-related uncertainty is at least going to address the portfolio flows, so that part of the anxiety probably will cease to exist. You have better clarity, better visibility on in which direction is the relationship with the US is going to progress. So that's a huge positive for rupee. The direct investment flow is something which probably will take its own time to recover, because the drivers in that case were completely different. So near term, it's a big positive for rupee, and we have seen that kind of reaction in the market, more than one big figure move in the currency in one single day. Going forward also, you could expect at least the worst case scenario for rupee that some of the analysts were building in. That will probably now get reassessed.
That's right. In fact, the kind of depreciation that rupee was seeing, it was a cause of concern, and that downside slide has been really substantially clipped at this particular moment. Now, hold your thoughts there, because a lot of really applause as well as impact, especially from the corporates who are going to earn much more, whose earnings were really depressed because of US being the largest market, being shut for us, being too expensive on the tariffs. So the corporate India is really cheering it. So the Dhurandhar deal is sealed, and Dalal Street has been cheering it as well. What is the sectoral impact for the bunch of sectors? Let's listen in to the word coming in from Bharat Forge, Pearl Global, Ather Industries and Kitex Garments.
If you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, but India and America are extremely aligned. And I think this shows the strength of that alliance partnership and puts us back in the right context in a stronger position to, grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
We're importing from India. We're subject to pay this additional 25% of penalty tariff. And compared to our competition, who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports. I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
This was something that the industry long awaited. And it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
All right. So very, very positive commentary coming in from corporate India. Dheeraj, how do you see this in terms of the earning momentum, big market opening up, and also the pent-up demand for the many last months of about 10 months that India has exported lesser to US? That will also kick in. What is the kind of earnings momentum and the economic impact that you foresee for now?
Well, I really can't speak to the earnings momentum. Let that be an equity strategist's job. But from a macroeconomic perspective, I can certainly say that this deal has come well in time. Look, the front-loading effects on India's exports to the US were just beginning to fade quite notably. And, it would have been only a matter of time where the financial burden on the Indian firms which were exporting to the US became large enough for them to reconsider exporting to the US altogether. So I believe that the deal happening is quite at an opportune time where those worst fears have certainly been allayed. I am also keen to note that, a lot of optimism has been concentrated in the sectors which were otherwise, scheduled to get hit a lot more because of the high tariffs, because of the high 50% tariffs, including the likes of textiles, gems, jewelries, chemicals, etc. We note that these are low-tech sectors, but very, very employment-intensive domestically. And if they are able to save US demand on the back of this deal, which I'm sure they will be, I think it bodes really well for the distribution of economic growth, which India has otherwise been recording at stellar pace. So I think that, not only from an headline growth perspective, this is a positive development, but also from the evenness or the distribution of growth that we will be looking at would be perhaps better than we have been fearing for the last few quarters.
That's right. And all of those earnings from the different sectors also that you mentioned, that's all going to add up to our GDP growth. So whatever we were penciling in, we are going to beat that number with this big relief coming in. Let me begin also by getting in our colleague who has been poring over this and also brings us the sectors which are going to specially be benefiting from this in terms of global competitiveness. Let me take it across to my colleague Rishabh Bhatnagar, who's joining in with all the details.
Right. While we're awaiting the fine print of the India-US trade deal, one thing that is begging for clarity is the fact that there are certain imports and exports from India that are still facing about 25 to 50% tariffs, and those are steel, aluminium, and certain auto parts as well. And why they are facing those heightened tariffs is because those tariffs were applied differently by the US government. They were applied under the Section 232, which is a National Security Act, and basis that these tariffs were applied to these sectors. So what we're seeing is that despite a trade deal having been agreed between the two countries, sectors like steel, aluminium, copper could still face tariffs as high as up to 50%. What we're seeing is that these Section 232 tariffs are usually not waived off in free trade agreements. That's at least what the policy is that the US practices. So that is something that we want clarity on. There's select auto parts that also face about a 25% tariff. So that's still more than the 18% tariff that India has managed to negotiate for itself. There's also zero tariffs as part of Section 232. There's also zero tariffs for pharma exports from India, for smartphone exports from India. It's a major one for Apple because they send a lot of smartphones that are built here in India, but they've shipped around the world and especially to the US. Those continue to remain at zero tariffs. There's certain electrical and mechanical components that those will also continue under the zero tariff regime under the Section 232. So still steel, aluminium, copper getting the shorter end of the stick, but we'll find out more as more and more details emerge.
All right, so that was a good sense on overall which sectors are impacted and what all clarity is really required. Vivek Kumar, from an economist's point of view, how big is this and in how much timeline are we going to see real impact on the ground and on the economy and the key drivers for that?
I think that's a very practical point, Nisha, that you brought forward, which is what can be the timeline. You know, we just completed a deal with the EU, and what we know is that the ratification of the deal is going to take anything which could be of the order of 12 to 15 months. Because of the nature of the deal, it has to be ratified by each member country in EU, and then possibly the implementation is likely to follow. So you're looking at a window of 12 to 18 months from now before the EU deal gets implemented. Now, in contrast, the US deal under Trump's administration has the possibility of getting implemented at a very short notice, because we've seen a lot of decisions in case of US have got centralized in the recent quarters. And if the president were to speed up things, he can possibly make that implementation work through within a span of 2 to 3 months. So this probably works in favor of India, because from an implementation perspective, there is the time lag that you could possibly associate is going to be extremely low in case of the US-India trade deal vis-a-vis some of the other trade deals that India has signed. By the way, India has signed almost 4 or 5 trade deals in the last 9 months. So that covers almost 42-43% of our merchandise export basket. That itself is a commendable task within such a short span of time. So I would probably look at everything. And since US deal has the likelihood of getting implemented sooner rather than later, probably the impact is going to be felt faster. Maybe you could see that accruing in FY 26-27 financial year. Our GDP growth estimate was in the range of 6.6 to 6.8%. Maybe with this kind of implementation, if everything goes smoothly, we could be touching the upper end of our forecast very soon.
All right, upper end of the forecast, and that's going to be really good news. But soon, by that, what do you mean? How soon could that be? Because my question started with the timeline.
Well, so yes, there is a lot of positives that we've discussed, Nisha, but there are things which are still sketchy. So, for example, a lot of details need to come out from the Ministry of Commerce in India as well as the US Trade Department in the US. And for example, things like if India has committed to buy $500 billion of energy, tech, etc., what else is India conceding in the trade deal? So you have to look at the overall picture. And to get a complete assessment, I think we'll have to wait for that detail to come through in the next maybe couple of weeks or so.
very early times, and we spoke to a whole host of corporates, and a lot of them were of the view that in 2 to 3 quarters they will see a significant improvement in their performance, profitability, especially because US is their biggest market and the pent-up demand will also kick in. So that's one thing that we have really seen, but of course many things in the fine print as well. Dheeraj, as a forex strategist, looking at the overall picture right now, where we wouldn't say that in this particular case, just because India wanted this big market opening for itself, that we really were desperate. It was a win-win situation where US was also equally under pressure to not let go of an alignment of the fastest growing economy in the world. There are so many global companies, US-based companies, who have a thriving business here and they invest. Now, looking at US sovereign debt situation, dollar debasement as one of the big aspects, and now our own rupee appreciating because of this booster coming in. Putting all this together, how do you view the forex trade and dollar rupee dynamics going forward?
Sure, I think that's $1 million question at the moment. Look, the dollar debasement theme, it's a very complicated idea at the moment. We could see some ingredients falling in place, but again, it's a very big thing to happen overnight. So we will have to really watch this space of the US macro policy and institutions to really understand if dollar debasement could really be a theme for the global economy. Having said that, we do hold a slightly bearish view on the dollar index, broad dollar index, through the course of 2026, and that's not very different from the market view either. And when you look at the price action for the broad dollar index recently, it broke below one of the very strong trend support levels, and that is where a lot of bearishness about the dollar in terms of sentiment has come in. The theme of dollar debasement has picked up a lot more voice in the recent sessions. But again, like I said, when you're thinking of debasement, you're thinking of days and months, not years after years. I mean, that's
all right,
how it
so
has
that's
to
a
play
big
out, and then
debate
it's called debasement.
for another day, Dheeraj. We will leave it at that at the current moment. Let's just rejoice what we have really got as a booster shot. Thank you so much, Vivek, as well as Dheeraj, for joining in. And over to my colleague Mahima, who's from the market pit, giving us all the action on how the market really cheered this big historic deal coming in. Mahima.
Well, so the streets have clearly cheered the India-US trade deal coming in. After 9 months, we've seen Nifty closing, about that 2.5%. We've closed well above the 25,700 levels. The next few days will be crucial to watch and see as to whether we are able to cross that 26,000 levels and how. But in terms of the overall, index, how it has performed, in May 25, Nifty had gained around 3.8%. After that, today we are seeing that 2.5% of increase. In terms of the top gainers on the Nifty 50, you have counters like Adani Ports, Adani Enterprises, followed by something like a Geo Finance, which made the mark. In terms of broader markets, they've clearly outperformed the benchmarks today. Both mid-cap 150 as well as small-cap 250. Have seen gains of about 2.7 to 2.8 odd percent. In terms of where the stocks stand, the mid-cap 150 saw top gainers include counters like Ather Industries, KPI Mills, as well as Bari. All of these counters on the back of India-US trade deal. And for small cap, you had counters like Avanti Feeds, Welspun Living, Ather Industries. All of these counters locked in upper circuit again on the back of India-US trade deal. So a lot of counters, were in focus today on the back of the India-US trade deal. Good news coming in. So this is the overall view of how markets have fared today.
Markets, rupee, and the corporate world and the overall economy really cheering and applauding the Indian government for this. With that, it's a wrap on this special edition. Thank you so much for joining in, and keep it with NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo-Yo Honey sing. This is my story.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today in our show, I'm going to get a very special company. It's in the agrochemical space. I'll be giving you some hints. Then you take the name of the company. This one is the company we're talking about. It's an agrochemical company. It's also a beneficiary of the Indian-US trade deal completion. The Q3 gross margins, they have risen, but the last 6 months were not good for the company. And it's of course a crop protection chemical company. The stock is down 32% in the last 6 months. It's a total, you could say, agrochemical player, and there are a handful of them. And the answer is Sharda Cropchem. That's the company we'll be talking about, and this is the company we'll be featuring in the KYC segment. But why are we calling this company and why in KYC? This industry itself has seen a lot of cycles, and now it seems like there are some green shoots happening in this cycle itself, and we'll ask the management what led to the strong growth in Q3. Was it the volume? Was it the pricing? Or is there something else in the international expansion front? Also, another question we'll be asking the management and why we are getting the company in KYC is the volume growth and the margin guidance. Will that be above the 35% mark? Volume growth has been around 20%. So that's where the questions will be arising. The third reason why we are calling this company in KYC is, if you could just show the third reason for KYC, is apart from the volume growth movement, this also includes your other companies as well. And these queries which are there, especially for Sharda Cropchem, this includes your global expansion plans. That is very much important as well. But nevertheless, these are the important points that we are trying to get the companies in. And yes, the geographies, where's the outperformance coming in, and the benefit, of course, the most important thing, the India-US trade deal. On the show, we'll have Ram Prakash Bubna. He's a chairman and MD. He will be responding to all of our queries, be it the trade deal, be it the company specifics, and yes, is there a big up move happening in the agrochemical space or not? Remember, it's a very cyclical play, so it'll be very much interesting to have a chat with Ram Prakash ji. But apart from that, let's move on and focus on about the company. This is very much important to understand. Agrochemical company at times becomes too technical for investors, but I'll try to make it very simple going ahead. It's an intellectual property driven company. There are IP rights even in the agrochemical space. That is something to watch out for. They do marketing and distribution of wide range of formulation and generic active ingredients. So it's like a total ecosystem of agrochemical space. Apart from this, the clients are there in more than 80 plus countries, and that is why these trade deals, when they get completed, it offers some kind of stability to even this kind of a business model. That's why it augurs well for Sharda Cropchem. They have procured roughly 3,000 odd registrations, and they have filed around 1,076 applications for the future registrations as well. That is where the IP rights are protected for a company like this. The capex was roughly 400 crores in 9 months FY26. We will be looking at the future capex plans as well from Ram Prakash ji, and the revenue breakup, agrochemical, that's still having the majority of it. Roughly 83% of the revenue is coming from this segment. The balance one is at around 17% for this space. Apart from that, segmental revenue, how does that actually stack up? And this is just only taken for the agrochemical space. There are 3 types of that. Herbicides, that's the 43% year-on-year growth which has come in, and that stood out on the Q3 numbers. Apart from the segmental revenue growth which was posted in Q3, let's move on to the other important data, and that includes the geographical revenue. This is the most important thing to look at. Why North America? Right now, recently, the India-European and the US trade deal has been completed. So these two regions, They are comprised of 87% of this total revenue. So these two is very much important for Sharda Cropchem going ahead. So this is the entire geographical breakup revenue I have given, but the recent triggers are also very much important. Strong Q3 numbers have been there, driven by the agrochemical segment. They have done really well. Let's get into a little bit of details into it. The Q3 volume growth that stood at around 14% and there was a change in the product mix also. Gross margins are seeing a strong improvement. Roughly 35% is something which the street is expecting that to be there going ahead. But the benefit, that's the most important thing from the trade deals with the European Union and USA. That is what we are looking at. And of course, the Europe and the LATAM region, that's where the volume growth, LATAM means Latin America, that is where the volume growth was very strong in 9 months FY26. So this is the entire picture for Sharda Cropchem. But I would like to make you sure that you understand how the KYC format works. KYC has around 8 parameters where we get in a company. This includes income statement, balance sheet, cash flow and return ratios to talk about the numbers. But apart from the numbers, also there are other stories to look at. That includes street trade, how stocks have moved, shareholding, especially the institutional portion, valuations, we are comparing them with different peers in the agrochemical space, and last but not the least, the outlook, be it the company, be it the industry. So these are the 8 rating parameters. The first one is the income statement. Income statement, remember the Q3 numbers have been very strong, so I've added that and I've given the combined number in the 9-month FY26 numbers. The revenue, they have seen a decent growth coming, and if you annualize it, of course Q4 is at times lumpy also, this goes 4,000 crore plus if you estimate for FY26. Decent growth coming in the PAT and the EBITDA front as well, and the gross margins is something which is very much important to look at, and that has also shown a good strength. But remember the business model of a company like this, you are not going to have a linear move. There will be cycles, there will be lumpiness, and that is where at times the concern comes in. And FY24, you see how low the margins were, just 10%. Now it has gone up to 16.4%. Yes, it's in an up cycle, but because of the business model, there might be volatility if you judge the company on the quarter basis. So income statement is a neutral rating. Let's look at the balance sheet, and in the balance sheet I have simplified it. Rather than giving you a lot of numbers on the screen, I'm trying to give you the top takeaways from the balance sheet itself, that how things have moved. And largely we see the equity size has gone up, but the cash and liquidity, that is a very important point. That's around 826 crore. That means there is a good cash deployment, or maybe you can expect some kind of a dividend or a bonus announcement. But the working capital days, that has also done well. This is a good ratio. The liquidity ratio is improving and the working capital day is also improving. So that is showing a good strength. And trade payables, however, that's on the higher side, and that might be a little bit of concern. So out of 4 points, 3 points have been strong, but net neutral with a little bit of positive liking on that. So we have done income statement, we have done balance sheet. The third one is also very much important, as the cash flow segment. And the way this business model works, there are variations in the trade payables, trade receivables, and that is why the cash flows will not be very uniform in a business model like that. And this is where the operating cash flows, we were looking at them, they are doing really well, it's decent. And remember, these are the FY25 numbers, by the way, and these are the net cash flow numbers, and that is where the variation comes in. But net, looking at the business model and the overall operating cash flows, it's still on an up cycle, and because of that, I will be giving this a neutral rating when it comes to the cash flows. But let's look at the return on ratios. The first one is the return on capital employed, and you see FY24 was, you could say, a very impactful year. That's just 3% down. It's 21 odd percent, starting to increase. It's around 16%, but a healthy one should be 20 odd percent. The 9-month number does suggest that, and that is why it's on an up cycle. So it's a decent one. And let's look at the ROE numbers also, how they have panned out. The story remains the same. This has also gone up. The 9-month numbers are on the higher side. Largely, if it maintains that 20% return ratio mark, then it's quite, you could say it's a very good company. But there is a seasonality impact, and that is why return ratios, to keep it a balanced perspective in KYC, I would be giving this a neutral rating. So we have spoken about the neutral rating, and also we are speaking about the shareholding pattern, how the shareholding pattern has changed. That's also very much important to talk about. Is there an institutional at play? FIs, you see, they have increased their stake, but slight profit booking has come in. They doubled it. and now they have reduced it to 4%. There's nothing to be concerned about because it's been largely flattish. The promoter stake is still, you could say, flat. Public is there. DIs is also a slight decrease is there. But net nothing much to actually consider about. Nothing has much changed, and that's also good. That's because stability in ownership is also something which I like. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about the street cred. Street cred is nothing but the returns which have come in to the investors. Last 6 months, that's the volatility which came in, the trade deal overhangs which were there, and the stock fell 32% in the last 6 months. Year to date, the stock has again rallied back. It's up 27%, signaling a good sentiment. And last 1 year, the stock has, despite the volatility, has doubled. So that is a very good news, and congratulations to the investors who are holding the stock for this period. And last 5 years also, it has been a multi-bagger. Stock is up to 191%. So this has been a very strong kind of a momentum for this street cred, but I would still give it a neutral rating because there might be some volatility and profit booking in the counter for the days to come. But come on, let's talk about the valuations. And when we talk about the valuations, largely the agrochemical players come in, and these are the different bigger names also, medium names also, and we have taken a 12-month forward P ratio to understand where does the company stand in terms of valuations. And remember, it's a cyclical industry, so all the industry players move together. Of course, there's some little bit stuff change definitely, but Sharda Cropchem, it's at 16 times its 12-month forward P, and that you compare that with PI Industries, it's on the higher side, 28 times. UPL comes in at 17 times, and if you see, other two stocks are also very much important. This includes Rallis India and Dhanuka Agrotech as well. That is still, it's coming at the cheaper level, but then Dhanuka Agritech and Rallis India also almost there. So that's definitely, it's one of the cheapest players in the agrochemical space. So it's a very positive rating and a good thumbs up when it comes to Sharda Cropchem when the valuations are in focus. That means right now also there might be a ripe entry time for this counter. Let's talk about the outlook, the 8th rating counter. FY26 margins, they are expected to remain at 35%, and remember the gross margins, they have been increasing both YOY basis and you could say sequential basis as well. The second important point for the outlook is the return ratios. They may see further improvement, and there's always a saying, ye dil mange more. Of course, a 20% return ratio, you can expect that to go up to around almost 30% and it can sustain. And if it sustains, you can see a re-rating in the stock. Sustained volume growth of 20% plus, that's what the investor presentation had stated. So we'll ask a little bit more about that from Ramchandra ji and the beneficiary of the US-India trade deal announcement. Now, how much the benefit comes, by when it comes, what are the total benefits in terms of money, that's something we'll ask the management. But net, it's a neutral rating I would like to keep for the industry. But yes, the cycle is turning towards the agrochemical space, and certain picks were certainly expected to do more. But let's give you the ratings, how the ratings stand, and let's just put out the numbers. There is a good part about the numbers, there are some kind of a negative also, but largely it has been very much neutral. All the 4 numbers I talk about, but remember there's an upcycle momentum going on in the agrochemical space, and that is where the attractiveness comes, and that's why I have called this company in KYC. Let's just show the other parameters, what is there. Is it that gloomy? I don't think so. Let's just show the valuations. Valuations, we have shown a strong thumbs up coming in. Outlook has been largely neutral going ahead, but in all, it is not bad and it is improving, and that is where I give 4.5 out of 8. It's one of the on the higher side on the normal average rating when I talk about this company. And apart from this, let's talk about the management who will be joining us, and look at that age, 57 years of experience. Ram Prakash ji is having in chemical, agrochemical and related businesses, like a sitting encyclopedia, and his education from IIT Bombay. So we will be asking him a lot of questions on the business as well as the industry. But joining us is Ramchandra Bubna ji from Sharda Cropchem. He is the CMD and a huge industry stalwart as well. Ramji, I would like to ask one important question. Is the India-US trade deal is done? Before we start on your earnings, what benefit comes to the industry now, and where does India stand?
India stands in a better position, but as far as we are concerned, we are not very much affected positively or negatively because our products are not freely tradable products. Our products are have to be approved by the government of USA, and there are not many companies who seek these kind of approvals because they are very expensive, time consuming, and not very certainty. So the customer have to buy only from the approved sources. We are one of them, and all the tariff that we are charged are being passed on to our customers, and they very readily and gracefully accept it.
All right, and Ram Prakashji, coming back to the earnings, the Q3 numbers were on the strong side. I was just checking the numbers, be it the volume growth, be it the margins. First, I'd like to know, what led to this strong volume growth, where the geographies were doing well?
See, the European Union geography has been doing very well, and the euro-dollar exchange rate has also been very favorable to us. And the climate has been also very good. The demand has been excellent. That has helped us to achieve these figures in Q3, and it will continue in Q4.
So just to put that in perspective, Ram Prakashji, that gross margins, what are the current levels and what kind of margin outlook we can expect going ahead?
The same, around 35%.
Okay, so the 35% remains the gross margin target for FY26 as well.
I would say 35.
All right, and the volume growth, Ram Prakashji, what kind of expectation we can have? Is 20% plus we can see on a blended level?
Yes, please.
Okay, all right. So that means 20% volume growth coming in as well as a margins outlook of 35%. And how the global pricing looking like, of the agrochemical space? Is some kind of a pressure which is already bottoming out? Some larger peers did mention that the pricing is coming back. So how much conviction is there that the pricing is coming back?
Sir, in our opinion, the prices are on the rise. The rise is a little slow, but they are continuously rising because we had a very bad phase in 2024, and the industry is coming out of that bad phase, and there's a lot of scope for the prices to still go up.
So there is a scope of prices to go up as well. I was just checking on the working capital days. There's been a significant improvement, 148 days in the month of March. Now it's around 70 days. Any other further improvement you can expect in the working capital days, and what is leading to that?
So the main thing is that we are getting a lot of support from our suppliers. The suppliers are extending us 180 days clean credit. And even if sometimes the payment gets delayed, they don't complain. So that is a very big support. And second thing is our customers are also paying on time because the industry is doing well, the agriculture is doing well, and that is rewarding Sharda Cropchem. We are receiving the payments on time, and we are receiving good credit from the suppliers.
Right, but Q3 has been strong, and you are suggesting that the Q4 numbers, that itself will also be keeping the growth, if not really strong, but at least the Q3 growth would be same. Am I right? All right. And sir, the cash and liquidity, that segment also we see the overall cash has gone up for the company from 558 crores to 826 crores. You are going to keep that for the working capital only, or is there some kind of an acquisition or any reward to the shareholders?
Mainly for the working capital, and more investment may be required for obtaining the registrations. So today we are spending about 450 to 500 crores. This may go up because these are very unpredictable. So we are also preparing ourselves for that.
Interesting on that. And Ram Prakashji, the capex incurred was roughly 400 crores in FY26 till now. FY27, what are the plans for the capex going ahead? Any kind of amount which has been earmarked?
Sir, it's very difficult to calculate it precisely because of the lot of uncertainties in the process of registrations. But it could be around 500 crores in FY27 also.
Yeah, that's pretty much interesting. The company is having client in more than 80 plus odd countries. I checked the registrations, that's roughly 3004 registrations, and you're filing 1076 applications for these registrations also. What's the outlook on this? And for our viewers who need to understand what these registrations means, if you could just explain that also to us.
Sir, the registrations are something like an approval, or you can say in a common man's language, license. And every government in every country wants to prevent unauthorized or wrong products into their country, because the implications of a wrong product or a harmful product are very serious in agrochemical industries. So the governments want to only allow those products which are safe for the human handling, for the soil, underground water, and the agricultural products that are produced. So this is a very complicated, and it is essential. And the most stringent geography is Europe, and the next most stringent is the United States, where the rules are followed and seriously implemented.
I was just seeing the product segments. There are 3 product segments in your agrochemical space. Insecticides and fungicides, they went up 20%, that's fine. But what caught my eye was herbicides. That went up 43% on a year-on-year basis. This kind of growth for herbicide segment, Ram Prakash ji, will it sustain in Q4 also?
As we are seeing the trend, it will sustain.
All right, and the numbers which you spoke about, the European region, you're getting benefit also for our viewers to understand that the euro is in a very favorable position as compared to rupee, and that's what the beneficiary is, this company. But the LATAM region, that's also showing a good volume of growth, and at times that helps a lot for our stocks in the agrochemical space who are having this exposure. What's your view on the LATAM region? That's called the Latin America.
It will go up. It will go up from the current level, because we are venturing into more and more products and more geographies. Brazil is one of the most important countries in Latin America, and we have increased our share in the Brazil quite considerably.
Interesting. And Ram Prakash, you spoke about that the products, new products are coming in. Now, product mix, does that change going ahead? Current product mix, what is there? And maybe 5 years or 3 years down the line, the product mix, what will it be? And if it is going towards the value added, what kind of, incremental information you can share with us?
See, there's a lot of invention and a lot of development in the technology, and more products are being invented and introduced by the multinational companies, which are more safe and more effective for the crops and for the environment. So we are also following up that trend. The multinational companies who introduce a product have a protection by patent for the first 10 years. And as soon as that product goes out of the patent, we are waiting to register them, or we start the process of registration even before they go out of the patent.
All right.
And this is a good margin and good opportunity.
Great. That's a very important thing, Ram Prakash, you have shared with us. But thank you very much sharing the growth prospects of the industry and your company, and best of luck for the future and for Sharda Cropchem. Thank you very much, sir.
Thank you so much.
So that, of course, just to give you the recap about this conversation which we had and the KYC ratings which I have given, largely Q3 numbers were on the stronger part, but remember, it's a cyclical industry, but green shoots are coming, and that's why the stock price has also gone up in the last 1 year. Stock nearly doubled. The valuation still attractive if you look at it, especially when you compare them with the other peers, and the outlook itself is also pretty much decent. Overall, we have given the total KYC ratings of 4.5 out of 8, and that is for your entire reference. That's all, folks, for today at NDTV Profit and KYC. Stay tuned for more companies I'll get for you.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. So come and witness Yo-Yo Honey sing. This is
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Big news, and I'm sure you've heard about it. India and the US have signed a trade deal. The nuances, the fine print of that will emerge over the coming weeks and days. But the good news has already been absorbed to a certain extent by equity markets, which have risen quite substantially. This is a major overhang that a lot of people have argued held equity markets and in extension your portfolios back all through 2025 and even in the start of 2026. The question is, where does this take us right now? Is the bad news behind us, and does that mean more good news for your portfolios? Let's find out. We're joined today by Trideep Bhattacharya, who is the President and CIO Equities Edelweiss Mutual Fund. Trideep, thanks so much for taking the time. Let me first ask you, did you anticipate that it would get done as soon as it did? Or when it did happen, because we've been waiting for it for some time. The point was that we waited for so long, a lot of people believed it was not going to happen.
Thanks, Alex, for inviting me to your show. Yes, indeed, the timing of it does come as a surprise. So one of the things that I've been saying for the last couple of months is that in this year, calendar year 26, we will go from trade conflicts to deal making. And in that context, the Indo-EU deal was the first one to come along, which was fine, second only after the United States. But what took everyone in the market by surprise is the timing of the US deal. Timing is one part. The other part is basically the extent or the number of 18%, which places us amongst the lowest tariff rates amongst the trading partners of the United States. I'm sure we'll talk more. So both of these, I think, are reasons to cheer.
So we'll talk about some of those implications for Indian equity markets. But Trideep, on the point of Europe, I read an interesting headline this morning from the perspective of the US. Whatever you can do, I can do better. What do you think about that?
Well, play with the words, but I think overall, in a matter of a fortnight, we've seen close to 50% of our exports, or even more than that, covered by deals, which is a very good outcome from a macro perspective.
Okay, so let's talk about it from the Indian equity perspective, and specifically from the mutual fund investor perspective, right? Because let's face it, the broader markets have seen tremendous pain, and the way that a lot of people have constructed their portfolios, just the hangover from the post-COVID-19 bull run, is that the tendency is to gravitate towards the broader market funds. And as a result of which, there's been a significant underperformance of portfolio over the course of 2025 and 2026. In fact, in 2026, Trideep, the small cap index, as of yesterday, had lost more ground than the full of 2025. So does that pain abate? Does it reverse?
Directionally, yes. Though I would still start with the large caps and then gradually go on to the small caps, because let's evaluate the situation. This deal or these two deals come on the back of the premise that India had underperformed emerging markets by close to 40% over the last year. So, and all of a sudden, in a matter of a fortnight, the major macro headwinds, which was on currency and the fact that we were not the favorites of the United States or, for that matter, globally, has changed. So the view of the constituent of the market which changes the most in this is FIIs. So from an FII market, on the back of a strong underperformance, when such a trigger or catalyst happens, usually the first favorite is the place where the FIIs goes, which is typically the large caps and the larger mid caps. And that would be followed by the small caps over a period of time. On net balance, what I'm saying is these two deals first will turn around the sentiment in FIIs, and that should mean a bit more buoyancies in large cap first, and then percolating down to mid and small caps.
So what you're saying, Tradeep, is that the up move from this point, and of course today you've seen a justified, not knee-jerk reaction. This is justified, if anything, right? But you're saying that the up move from this point is going to be predicated on what foreign institutions do?
I think well, not just that. For foreign institutions are about 16% of the market. So not just them, this would also kind of change the view of domestic investors who are actually mostly loaded in mid and small caps. But that change will actually happen gradually. The delta between yesterday and today is the FIIs and the lack of trigger which was lacking. So hence the immediate movement in terms of sentiment would come from FIIs is the only limited point I am making. Net, what this does is it removes the macro negativity which was around the lack of deals coming through. Bear in mind that net, even over the last year, even with the US tariff, the impact was only about 30 to 50 basis points of GDP in terms of the actual numbers. It was more a sentiment impact, particularly in the context of globally, where a lack of a deal made us underperform global markets in a meaningful way. My sense is that underperformance versus global markets which actually start to revise.
Interesting, because that impact on growth that a lot of people estimated between 25 and 30 basis points now becomes a tailwind, doesn't it? You add that to your estimates for the new financial year. But having said that, Tradeep, I don't want to get into your own strategy as a portfolio manager. What did it look like running up to today? And are you likely to change the texture or the breakup of some of the schemes? Maybe we can start talking about the diversified schemes first.
Indeed. So I think the first thing, we are bottom-up investors, quite frankly, and whenever we see valuation mispricing, which we were getting to in some sectors which were more export-oriented, like for instance, IT being one of them, chemicals being another, auto ancillaries, globally facing auto ancillaries another. These three segments were gradually getting to more attractive valuations, and we were kind of anyway starting to nibble at them, given where they were available. What this does is this sort of an event fast forwards that sort of a transition, and that's where on fringes we have sort of acted upon to kind of make our portfolios more resilient in terms of the earlier sectors which were impacted more by the lack of such deals, and now all of a sudden the positive catalyst that this deals become.
Okay, let's talk about earnings as well, because Tradeep, you've seen a part of the earnings season pan out in the third quarter, right? And some of those signs are that what you saw in the second quarter in terms of margin expansion, where a few companies were reporting better than expected performance on the bottom line, led by margin expansion and not by top line. Does that change in that, just to put things very simply for my viewer to also understand, companies were not selling more things. They were simply earning more for every unit that they sold. So do we see that pickup in demand take place as early as the current quarter, which is the fourth quarter, or do we have to wait till a better part of the new year is done?
Very interesting question. And there are two or three facets to this. Let me kind of take in parts. We've been saying for the last 2 or 3 months that the three themes of 2026 has been one, from trade deal to trade, from trade conflicts to deal making, which now with the two deals coming through has come through. The second point that we have been making over the last few months is that the earnings upgrade cycle with over the last 12 to 15 months has been kind of moving downwards. And we have seen an earnings cut of about 12 to 15%, 12 to 13% over the last year or so, is finally turning or bottoming out. September quarter in that context was the first quarter where we saw 2 to 3% earnings upgrade coming through. This was mostly towards domestic-oriented companies, driven by partly a softer base and slightly better margins, which is what you were highlighting. I think post these deals coming through, while Q3 numbers are well struck and net we would see 1 to 2% earnings upgrades coming through. March quarter prospects get a little bolstered by, even to a certain extent, some of the export-oriented industries, where the outlook changes in terms of deal making. May not necessarily be in numbers, but they will start to see better order book situation, better visibility of trade, which will positively impact the multiples that they are trading at in the near term, and earnings over a period of next 6 to 9 months is what I would say.
Okay. I want to also get your view on the implications of the amount of issuance that is expected to take place in 2026, and whether that will be a mop for any additional liquidity that might be generated, or interest that might be generated to deploy, and whether that will take away from the market. Because if money is being deployed into these new companies that are looking to raise funds, or old investors that are looking to sell on Dalal Street for the first time, then one would assume that it'll be difficult for the equity market as a whole to rise.
Yeah, it depends on the pipeline. The pipeline clearly has been negatively impacted in the last couple of months, given the macro negativity that has been kind of there. With the deals coming through, that I suppose that macro sentiment will improve, and so will the deals with IPO. But given that globally we've underperformed by close to about 40% over the last year, our valuations finally are reasonable, particularly on the large cap front as compared to 10-year average. I think the market has the appetite to take Indian paper. Of course, one has to distinguish between good paper and bad paper, and those selectivity investors will still have to kind of go through. But net, I think after a good close to 1.5 years, I see the sentiment towards India changing on the back of the Indo-EU deal, and the US deal is a key headline that I wanted to kind of communicate.
Yeah,
and hence in that context, FII interest should be there in some of these trade deals.
Okay, so that is well communicated. But Trideep, let me ask you this. Over the last couple of years, we've been stressing very importantly in a lot of conversations that you and I have had, and in conversations that I've had with a lot of other fund managers, which is keep your return expectations grounded. If I were to ask you that question, if I were to have asked you that question last week, if I'm asking you this question just now, has that answer changed just a tad bit on the upside? And,
yes.
And to what extent?
Well, to what extent? So ultimately, we are sort of, worshippers of earnings, if you may call it that way, as bottom-up investors. I think all this will translate into better earnings towards the back half of this year, not immediately. So immediately you will see in the PE multiples over a period of time, you will see earnings estimates coming through. I do see an earnings upgrades hypothesis being strengthened over the next 9 to 12 months by about 2 to 3% incrementally on the back of these transactions coming through. But what this will do is this macro negativity of news headlines impacting India will now shift back to earnings from an Indian market standpoint, which is genuinely good.
Okay. So, but we're still talking about long returns of plus or minus, plus of about plus 2 to 3 percentage points over nominal GDP. Is that fair?
That's the change in earnings estimate. Ultimately, what you will do is the markets will put a multiple to it, and hence the returns will be maybe higher than that. But certainly, kind of we do see a better earnings scenario over the next 12 to 15 months on the back of this.
Okay, very interesting. All right. So a lot of positives to take from that conversation. Trideep, thanks so much for taking the time, and I think it's a good time to be an investor in India, as it always has been. It's just reinforced by the kind of move that you've seen in the equity market today.
Thank you.
A lot of you will look at your portfolios at the end of today, and it'll bring a smile to your face. Today more than anything else, and that's because the positivity that has come about after the signing of the US-India trade deal has flowed through into equity markets. But what learnings can you take from the last year and a half or so, and how should you adjust your portfolio strategy so that you can get the most of the rally that is expected to pan out over the next several months. I'm joined today by Mohit Gang, who's a co-founder and chief executive officer of Moneyfront. Mohit, thanks as always for taking the time. First, I'm sure that a lot of people might have called you or you've spoken to some of your clients. What is the message that you're giving them today?
Oh, I think the message is there for everyone to take, Alex. Thank you so much for having me out here. And it's written on the walls that if you sit patiently, you wait for the opportune moment, there is enough and more money to be made in the markets. And if you are the one who gets perturbed with every movement of the market, has the itch to keep changing your asset allocation, has the itch to keep flipping your funds, keep redeeming out of it in bad cycles and keep entering in when you think everything's going fine, I think you're not the one who will make money. So this is a timeless lesson which the markets have given to all of us. For last 18 months, we haven't done anything. We've just been in a tight range, some minor ups and downs and nothing much. And today, suddenly, with just one flash of a news, we don't even have time to enter the markets now. So this is classic markets, Alex.
Yeah, you know, I was looking at it. 7th of August last year was when the initial 25% tariffs came into play. And 27th of August was when that penalty of 25% additional tariffs came into play. And the Nifty 50 as of close on the 6th of August, as of yesterday, the difference was that the Nifty 50 was up 2.1% from that point. And the broader markets were actually, the mid-cap index was down 2%, the small-cap index was down as much as 10%. Quite a bit of that has changed quite dramatically. Now we've gone above once again that level that we were on the 6th of August. But the portfolios that a lot of people had constructed, Mohit, had tended towards the small cap funds, right, at the start of 2025. And those have likely changed over the course of 2025 and heading into 2026. Do you think that's the case?
Oh, absolutely, Alex. I think on the back of a great 23 and 24, I think every investor and their relatives and their neighbors and everyone kind of got extremely overconfident in the market, heavily loaded their portfolios towards mid and small caps, heavily loaded towards micro caps, unknown names. And they were rewarded for a long while till 2024. And suddenly the script changed in 2025 and small caps were the worst performing bet on the street, as you rightly mentioned. And since then, they've never seen light of the day. Honestly, I think, again, as I said, timeless lessons in investing that you cannot get overconfident and over-dependent on any single asset class. And you cannot be just going by the past returns always and thinking that same will continue in future. Heavily load yourselves into one particular segment or one particular market cap or one particular sector, right? So small caps still continue, even today, even after the news today, Alex, I think small caps are under some kind of pressure just because the valuations have become extremely frothy, right? And again, last year, if you compare, large caps were the ones which gave investors at least some somber returns in an otherwise very despair kind of a situation, right? So if you were clutching onto the right stocks, if you had the asset allocation right, if you were having some amount of allocations towards large caps, the flexi caps, then you had a decent going even in 2025 and you weren't like heavily disappointed. But otherwise, it's not the case.
Okay, so let's talk about what you should do from this point on, because Mohit, the tendency in a underperforming scenario is to stop or redeem. And for those people that I think continued to invest through a systematic route, even if it is in small caps, they will at some point get the benefit of that because they've been averaging or they've been buying when the unit cost is low. So a lot of people will actually see a quantum shift in their earnings, even if we see a 5 to 7% or 10% increase from this point on. So how would you construct your portfolio right now?
Oh, absolutely, Alex. Look, again, if you had been patient with your portfolio and actually were following the right allocation strategy, which means that your SIPs continued to go through the course of 2025, whether it be in large caps, mid caps, small caps, depending on how your portfolio was shaped, then obviously you have accumulated a lot of units over this period of time. And now's the time those accumulated units will start rewarding you. Some portion today and maybe coming future months, I think, given at the backdrop of the EU deal and the US deal both happening. And then perhaps by the second half of this year, you should start looking at good corporate earnings also coming back. And the last year's base effect will also kick in. So you will have reasonable numbers this year, right? So the investors and their patience will get rewarded. What should one do now? The second part of your question. Look, I think I would still stick by my asset allocation strategy. As an investor today, I would like to put 80% of my portfolio into core strategic assets, which are long-term in nature, which are meant for my long-term financial goals and needs, like my retirement or some 10, 15-year kind of goals. The second portion, which is my tactical portion, will be 20%. It could be a little lesser for less aggressive people. But that's more for quicker plays and quicker check-in and check-out. But on the strategic part, which is the most crucial part of your portfolio, I would still be largely onto large caps, flexi caps, and large and mid-cap category. So almost 50% of my portfolio I'll put in that bucket, around 20% in mid-caps, some 10% international allocation, can swing by 5% plus minus. Some 10% commodities, can go up to 15, can swing by 5-10%, 5% plus minus, and maybe a little bit of 5 to 10% small caps. Still not very heavily going into small caps. The market setup has to convincingly be extremely rich on valuations, less frothy, and convincingly into a very good happy territory for one to take a larger allocation bet into small caps. And even from a very long-term perspective, I think having small caps limited to around 10-15% odd maximum in a portfolio is a very good way to manage and construct a long-term portfolio.
Okay, so this is very interesting. We are heading into the last leg of the financial year as well. And as they usually say, from a tax standpoint as well, this is a great opportunity for you to correct problems in your portfolio. If you need to rebalance, for example, and if, for example, hypothetically, you've got an overweight on small caps, which you shouldn't have, and if there is loss that you're seeing in that portfolio, you can just book that out and you can set that off against future profit. So this is a great opportunity for you to consider doing that. But I want to ask you within this, and I know that you're a proponent of a passive also as a strategy. So out of all of this, where would the passive strategies come into play? And is there room for a multi-asset fund? Because there are people who've taken that commodity allocation and they've said they don't want to take that decision themselves. They want to ask the fund manager to do it. And so they've done it through that route. So where does the multi-asset fit in this portfolio?
The first part, Alex, on the passive side, passives predominantly will form the large cap portion of your portfolio. In the large cap bucket is where I would place my passives. The second placement of passives could be in the international bucket, because there again, I believe that it's very difficult to track so many markets globally. So it's better to have a basket of ETFs or an index-based route, right? And the other portion could be purely active. Now, the second part of your question, which was more related to, sorry, could you just repeat the second part? Multi-asset, yeah. So look, I think it's fantastic to have a multi-asset product in your portfolio if you really don't want to haggle too much between your commodities allocation, your fixed income allocation, your international allocation, so on and so forth, because these are smaller allocations and many a times we get confused as to what to increase and what to decrease in our portfolio. So leaving it to the choice of a dependent fund manager who's professionally qualified and doing this day in and day out, I think it's a fantastic choice. So yes, for investors who don't want to be active enough to take those bold calls, it's good to be lazy and have a multi-asset allocation in the portfolio. So you can combine your commodities, international, some portion of REIT InvIT, even fixed income by a large extent through a single multi-asset window. And I honestly think genuinely that's a great product in any kind of a portfolio, unless you are savvy enough or unless you have advisors who are like really confident to be dealing across all market caps and across all sectoral themes independently. I think otherwise multi-asset is a good choice.
You know, I was speaking to somebody just yesterday, and that person was saying that in this kind of scenario, having a higher commodity exposure is not a bad deal. But the advocation was for gold and not for silver. Do you agree or concur?
Oh, absolutely, Alex. In fact, I have a very bold blog which I rolled out around 10-15 days back, saying that we are a bit bearish on silver relatively, and we are structurally bullish on gold. Right. So yes, I continue to believe that for multiple reasons, gold is a revolt against the system. It's a revolt against the US hegemony, against the dollar as a concept of a singular petrodollar currency of the world. It's a revolt against a lot of geopolitical events which are happening. Right. And central bank demand is much more steady, much more stable. The supply of gold isn't so abundant. It's not easily replenishable. And for 5,000 years of human history, gold has withstood all kinds of pressures and still stands tall as a currency and as a store of wealth. Right. So I'm structurally very bullish given the way the global setup is. So gold, yes, it's a bullish call relatively.
Fair point. All right. Well, that's how you should line up your portfolio strategy. And if there are excesses, this is the moment to correct them. Mohit, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much, Alex.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. This is NDTV Profit.
आज हर भारतवासी देश भर में माननीय प्रधानमंत्री नरेंद्र मोदी जी का साधुवाद कर रहा है कि उन्होंने यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ एक बहुत ही बढ़िया ट्रेड डील, जिसका देशवासियों को कई महीनों से इंतजार था, संपन्न किया है। देश हित और जनहित को सामने रखते हुए एक बड़ा मजबूत भारत के भविष्य को चार चांद लगाने वाला ट्रेड डील माननीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में कल रात फाइनलाइज किया गया है। मैं 140 करोड़ देशवासियों की तरफ से माननीय प्रधानमंत्री नरेंद्र मोदी जी का धन्यवाद करता हूं और आप सभी को बधाई देता हूं, क्योंकि ये वास्तव में भारत की अर्थव्यवस्था को, भारत के 140 करोड़ नागरिकों को, हर गरीब, किसान, मछुआरा, गांव में रहने वाला युवा, युवती, हमारी बहनें, महिलाएं, सभी के लिए ढेर सारे अवसर लाने वाला ट्रेड डील माननीय प्रधानमंत्री जी ने कल तय किया। साधारणतः तो हम पार्लियामेंट में बोलना चाहते थे इसके बारे में, लेकिन हम सबने देखा वो भद्दा दृश्य, जिस प्रकार से विपक्ष, विशेषकर राहुल गांधी जी के नेतृत्व में कांग्रेस पार्टी और उनके मित्र पक्ष डीएमके, तृणमूल कांग्रेस, समाजवादी पार्टी, कितना भद्दा व्यवहार आज उन्होंने पार्लियामेंट में किया। माननीय अध्यक्ष जी की आसन तक पहुंचकर उनका अपमान किया। मैं घोर निंदा करता हूं विपक्ष की, राहुल गांधी जी की, जिसके कारण हम पार्लियामेंट के बदले आज आपके समक्ष यहां पे जानकारी देने आए हैं। हम सब जानते हैं कि माननीय प्रधानमंत्री जी ने अपने मित्रता के रखते प्रेसिडेंट ट्रंप के साथ जो उनके आत्मीय संबंध है, उसके मद्देनजर जो ट्रेड डील यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ फाइनलाइज की है वो हमारे सभी पड़ोसी, सभी आसपास के देश, सभी जो देश हमारे साथ स्पर्धा करते हैं, उन सभी देशों में सबसे बढ़िया डील भारत को मिली है, आप सबको, हम सबको मिली है, जो देशवासियों के उज्जवल भविष्य के लिए शुभ संकेत लाती है। हम सब जानते हैं महीनों से हमारी नेगोशिएटिंग टीम्स यूनाइटेड स्टेट्स ऑफ अमेरिका के अधिकारियों के साथ, मंत्रियों के साथ लगातार डायलॉग बनाई हुई थी, बातचीत में कर रही थी। कई सारे जटिल विषय थे, कई सारी समस्याएं थी। भारत के ऊपर 50% रेसिप्रोकल टैरिफ लगा हुआ था। उद्योग जगत को, हमारे किसानों को जो बड़ी मात्रा में निर्यात करते हैं, सभी को तकलीफ हो रही थी। हमारे मरीन एक्सपोर्टर्स, सी फूड एक्सपोर्टर्स भी दिक्कत में थे। वस्त्र क्षेत्र, टेक्सटाइल सेक्टर में भी आवश्यकता थी कि ये रेट कम हो। यहां तक कि कुछ दिन पहले तक विपक्ष के नेता भी हमें पूछ रहे थे कि कब होगा यूएस डील। और मैं हैरान हूं, ये डबल स्टैंडर्ड्स जो राहुल गांधी जी बार बार दिखाते हैं। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने कल इतनी बढ़िया डील भारत के लिए तय की है, जो इतने वर्ष, एक महीनों में हम तय नहीं कर पा रहे थे। उन्होंने अपने मित्रता के आधार पर भारत के हितों को प्राथमिकता देते हुए और भारत की तेज गति से बढ़ती हुई अर्थव्यवस्था को विश्व के सामने जिस प्रकार से पेश किया है, उसके चलते भारत को ये बढ़िया डील माननीय प्रधानमंत्री जी के नेतृत्व में मिली है। मैं पुनः एक बार उनके नेतृत्व के लिए, उनके मार्गदर्शन के लिए और जिस प्रकार से उन्होंने जनहित और देश हित को संभाला है, उसके लिए उनका धन्यवाद करता हूं। मित्रों, हम सब जानते हैं, पूरा देश जानता है किस प्रकार से माननीय प्रधानमंत्री हमेशा हमारे किसानों के लिए, पशुपालन के साथ जुड़े हुए हमारे भाई बहनों के लिए, डेयरी सेक्टर के लिए लगातार चिंतित रहते हैं, उनके हितों की संरक्षण करते हैं। यहां तक कि हमने देखा इतना बड़ा ट्रेड डील, रीजनल कॉम्प्रिहेंसिव इकोनॉमिक पार्टनरशिप आरसेप, जिसमें कांग्रेस ने भारत को झोंक दिया था 2011-12 में, एक प्रकार से चाइना के साथ एफटीए करने का पाप राहुल गांधी ने किया था। उससे भी माननीय प्रधानमंत्री जी ने देश को बचाया और आरसेप से जुड़ने से इनकार कर दिया, जिसके बाद पूरे देश में राहत की सब चारों ओर से सूचना आई थी। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने हमेशा एग्रीकल्चर और डेयरी, इन दोनों सेक्टर्स को संभाला है, उनके हितों को संभाला है और इस क्षेत्र में लोगों और डेयरी, इन दोनों सेक्टर्स को, हितों को संभाला है और इस क्षेत्र में लोगों को उज्जवल भविष्य मिले और मौके मिले, आमदनी बढ़े, उसके लिए लगातार काम किया है। कभी उनके साथ, उनके हितों के साथ समझौता माननीय प्रधानमंत्री जी ने नहीं होने दिया और मुझे खुशी है कि पूरा देश इस बात को समझता है, इस बात का उनको आकलन है। और यूएस ट्रेड डील में भी भारत के जो सेंसिटिव सेक्टर्स हैं, एग्रीकल्चर को लेके, डेयरी को लेके, उनको संरक्षित किया गया है। हमने पूरे देश भर से आई हुई खबरों को देखा, चारों ओर उल्लास है। हमारे जितने लोग भारत के निर्यात में जुड़े हुए हैं, भारत के टेक्नोलॉजी सेक्टर से जुड़े हुए हैं, भारत में नई आधुनिक टेक्नोलॉजी लाकर यहाँ ग्लोबल सप्लाई चेन्स, ग्लोबल वैल्यू चेन्स का हिस्सा बनना चाहते हैं, ग्लोबल कैपेबिलिटी सेंटर्स लगाना चाहते हैं, निवेश करना चाहते हैं। अलग अलग क्षेत्र जो विशेषकर लेबर इंटेंसिव है, जिसमें लाखों करोड़ों लोगों को नौकरी का, रोजगार का साधन मिलता है, वो सब कितने उत्साहित हैं इस ट्रेड डील से। हमारे मछुआरे जो सी फूड एक्सपोर्ट करते हैं, उन्होंने जिस प्रकार से सभी कोस्टल रीजन्स में खुशी मनाई है, ये दर्शाता है कि ये ट्रेड डील भारत के उज्जवल भविष्य का शुभ संकेत लेके आई है। मित्रों, मैं मानता हूं कि इस ट्रेड डील से हमारे जो सूक्ष्म, लघु और मध्यम उद्योग है, एमएसएमई सेक्टर है, हमारे इंजीनियरिंग सेक्टर के सभी प्लेयर्स, चाहे ऑटो कंपोनेंट्स बनाते हो, एयरक्राफ्ट पार्ट्स बनाते हो, इंजीनियरिंग के अलग अलग प्रकार के सामान अमेरिका में बेचने का काम करते हो या भविष्य में करना चाहें, हमारे टेक्सटाइल क्षेत्र, हमारा जेम एंड ज्वेलरी सेक्टर, हमारा लेदर गुड सेक्टर, हमारा मरीन गुड सेक्टर, सभी को ढेर सारे अवसर, ढेर सारे मौके इस ट्रेड डील के माध्यम से मिलेंगे। बड़ा दुर्भाग्य है कि राहुल गांधी जैसे नकारात्मक सोच रखने वाले नेता देश को आज गुमराह या भ्रमित करने की कोशिश कर रहे हैं। मैं घोर निंदा करता हूं राहुल गांधी जी की। झूठ और फरेब के नाम पे वो लोगों को गुमराह करना चाहते हैं। उनको देश की तरक्की से कोई लेना देना नहीं है। देश आगे बढ़ रहा है, विश्व की सबसे तेज गति से बढ़ने वाली अर्थव्यवस्था बना है, उनको उससे कोई दिलचस्पी नहीं है। उनका बस चले तो जिस प्रकार से यूपीए के राज में, कांग्रेस के राज में 10 वर्षों में उन्होंने भारत की अर्थव्यवस्था को ध्वस्त कर दिया था, फ्रेजाइल 5 इकोनॉमी बना दी, महंगाई से लोगों को परेशान कर दिया, विकास यात्रा ठप कर दी। उनका बस चलेगा तो भारत को फिर एक बार उसी प्रकार से देखना चाहेंगे। और मुझे नहीं लगता भारत का एक भी व्यक्ति, एक भी नागरिक उनके इस भ्रामक सोच के साथ अपने आप को जोड़ सकता है। राहुल गांधी जी एक नकारात्मक सोच के प्रतीक है और उनके साथ जुड़कर डीएमके पार्टी के नेता हो, तृणमूल के नेता हो, चाहे वो समाजवादी पार्टी के नेता हो, इन सभी ने शायद भारत के उज्जवल भविष्य, हमारे युवा युवतियों को जो नए अवसर मिल रहे हैं, जो हमारा उद्योग तेज गति से आगे प्रगति करने के लिए तट पर है, जो नए नए क्षेत्र, आर्टिफिशियल इंटेलिजेंस हो, सेमीकंडक्टर्स हो, क्रिटिकल मिनरल्स हो, नए नए अति आधुनिक जो क्षेत्र खुल रहे हैं, उसमें जो हमें यूनाइटेड स्टेट्स ऑफ अमेरिका से मदद मिल सकती है, जो वहां से हमें सामान मिल सकता है, हाई क्वालिटी, हाई परफॉर्मेंस डेटा सेंटर्स भारत में आ सकते हैं, लाखों करोड़ रुपए का जो निवेश हम भारत में आकर्षित करने में जुटे हुए हैं। राहुल गांधी जी को क्या मिर्ची लगती है? राहुल गांधी जी को देश की प्रगति से नफरत है? राहुल गांधी जी को हमारी बहनों से, हमारे युवा युवतियों से कोई नाराजगी है जो उनका उज्जवल भविष्य उनसे देखा नहीं जाता है? उन्होंने जवाब देना पड़ेगा देश की जनता को कि इस नकारात्मक सोच के पीछे वो क्या चाहते हैं। और मित्रों, मैं पूरी तरीके से निंदा करता हूं राहुल गांधी जी और उनके सभी पार्टी और मित्र पक्ष के नेताओं का, जो इस प्रकार की ओछी सोच, नकारात्मक सोच फैलाने का पाप कर रहे हैं। वो भारत का उज्जवल भविष्य नहीं चाहते। वो हर प्रकार से राजनीतिक अराजकता फैलाने की कोशिश करते हैं। पार्लियामेंट में आपने उनका रवैया देखा, उनका सोच पूरे देश ने देखा। वो हमारे आर्मी के जवानों पर कम विश्वास करते हैं, हमारे सेना के ऊपर प्रश्न चिन्ह उठाते हैं, हमारे उद्योग जगत के भविष्य को खराब करना चाहते हैं। मुझे लगता है अब समय आ गया है कि देश की जनता, राहुल गांधी जी हो, ममता बनर्जी जी हो, चाहे तृणमूल के अभिषेक बैनर्जी हो या तमिलनाडु के एमके स्टालिन, उदयनिधि स्टालिन, बालू, श्री बालू जी, श्री मारन जी, कानीमोजी जी, कम्युनिस्ट पार्टी के नेता, समाजवादी के अखिलेश यादव जी, देश की जनता इन सब नेताओं से माफी मांगेगी और उनको जवाबदेही ठहराएगी उनके इस नकारात्मक रवैये के लिए। वो जनहित के पूरी तरीके से खिलाफ है, वो देश की प्रगति, देश के उज्जवल भविष्य के खिलाफ है। अनाप शनाप आरोप लगा रहे हैं और जिस प्रकार के विषय उठा रहे हैं, एक नेता ने पूछा, अमेरिकी अध्यक्ष ने, अमेरिका के राष्ट्रपति ने पहले क्यों ट्वीट किया? अरे भाई, रेसिप्रोकल टैरिफ तो अमेरिका ने लगाया था, अमेरिका ने रेसिप्रोकल टैरिफ कम करना था। तो जब उनको टैरिफ कम करना है और 50 से सीधा 18% इतना कम हुआ, तो उसकी जानकारी तो उधर से ही आएगी। स्वाभाविक है कि उनको टैरिफ कम करना है तो उसकी जानकारी राष्ट्रपति माननीय डोनाल्ड ट्रंप जी देंगे। और इस मौके पे मैं माननीय राष्ट्रपति डोनाल्ड ट्रंप का भी धन्यवाद करना चाहता हूं, जिन्होंने प्रधानमंत्री नरेंद्र मोदी जी के मित्रता का सम्मान किया। उन्होंने माननीय प्रधानमंत्री नरेंद्र मोदी जी को विश्व का, हमारे स्पर्धा वाले देशों में सबसे अच्छा, बढ़िया ट्रेड डील दिया और आगे चल के भारत और अमेरिका के बीच संबंध और मजबूत हो और उज्जवल भविष्य दोनों देशों के लोगों का हम सुनिश्चित करें, उसकी शुभेच्छा दी। और मुझे पूरा विश्वास है कि ये जो ट्रेड डील की गई है, ये मात्र एक ट्रेड डील नहीं है, ये एक पड़ाव है भारत के उज्जवल भविष्य का। ये आगे आने वाले दिनों का शुभ संकेत है, जब भारत की अर्थव्यवस्था और तेजी से आगे बढ़ेगी। आज चारों ओर इसकी सराहना देखने को मिलती है। कल रात से ही जिस प्रकार से देश और विदेश में लोग इस डील की तारीफ कर रहे हैं, जिस प्रकार से चारों ओर लोग सेलिब्रेट कर रहे हैं भारत और यूनाइटेड स्टेट्स ऑफ अमेरिका के बीच ये डील, मुझे पूरा विश्वास है कि ये जो जनता ने ठुकराए हुए नेता हैं, the failed group of disparate, disgruntled and rejected leaders of the Congress party and their friends in the DMK, Trinamool Congress, Communist parties, Samajwadi Party, the entire India Alliance leaders who have failed India very badly, who have failed Bharat in all respects will be rejected by the people of India, who will teach them a lesson for their negativity and for their anti-India, anti-national thinking. Friends, we stand for the people of India. We stand for national interest. And today, 140 crore Indians are celebrating a trade deal which is under final stages of detailing between the negotiating teams of both countries. We will be shortly issuing a joint statement by both countries along with the details which we will be shortly inking between the United States of America and India. And as soon as the final understanding of the deal is inked and the joint statement is finalized, technical processes are completed, full details will be shared. But I can assure the people of India, I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud, that will protect the interest of every Indian and provide huge opportunities for all the people of India, and will protect the sensitive sectors, the interests of our agriculture and our dairy sectors in full respect, opening up huge opportunities for our labor-intensive sectors, export sectors in textiles, plastics, apparel, home decor, leather and footwear, gems and jewelry, organic chemicals, rubber goods, machineries, so many products, aircraft components. This is truly a deal that every Indian can be proud of. India is a fast-growing economy. We are the fastest growing large economy in the country, in the world. India's demand is continuously increasing. Our demand for ICT products, our demand for data center equipment, our demand for high quality technology and innovation, our demand for raw materials is continuously rising. And in that situation, this deal also opens up opportunities for India to get the best in class, world-class technologies to further power the India growth story, the Indian economy. I commend this deal to every Indian, to 140 crore Bharatvasis. Thank you very much.
Well, you heard it from the Commerce Minister, Piyush Goyal, addressing media over there. Now thanking the Prime Minister for bringing us the deal with the US. Of course, there was a barrage that was set against the opposition for the kind of statements that have been made, and he justified why it was Donald Trump, the American president, who went out first to announce this deal. And this happened last night. He says, of course, it was the Americans who had to announce the deal because they were the ones who had imposed the higher tariffs. So it was just right, he says, for the Americans, for American President Donald Trump to put out that entire deal first, before the Indian side did. But indeed, as far as the statements coming through from Piyush Goyal, the Commerce Minister, in that media conference are concerned, he says the teams have been negotiating. The US officials have been at it along with the Indian officials for months, he said. And indeed, he has talked about the many issues and the complexities that were involved in getting this deal through. He says some technicalities have to be gotten through, but also he very clearly mentions that there will be a joint statement. The US and the Indian side are going to have a joint statement about this deal. So not much more clarity coming in. All the details of the deal, they haven't come out yet. And I believe from what the Commerce Minister is saying, this will come out only when the technicalities are through and when the two sides are ready for a joint statement. But he says, overall, he says, this is going to be very good for the labor-intensive sectors, and they are going to be excited about this deal. He talks about industrialists and farmers who are suffering. But let's go across to S.C. Ralhan. He's joining us right now to decode what the Commerce Minister has said. Mr. Ralhan, good to have you with us. What's your understanding of what we've heard? Because we were expecting more clarifications, more details of the deal, but we don't have that yet. It would likely come in a statement and a joint statement later, which is what the Commerce Minister has indicated. But what are your key takeaways from what Piyush Goyal has just mentioned? Mr. Ralhan.
Yeah.
Mr. Ralhan, I was just about asking you from Piyush Goyal's side, when he talks about this deal having gone through, but there are technicalities, and he says there is going to be a joint statement. We were expecting more clarifications on the deal. We haven't got those yet. What's your reading of this?
No, we are also waiting for the executive order. Normally it comes after the announcement of the deal. So first of all, I would like to congratulate and say thanks, big thanks to the Honorable Prime Minister and Shri Piyush Goyal ji. It is all their efforts. And the whole industry is delighted now. Lot of units were totally closed, though whose exports were 100% to the US. But I think they have a big relief on their chairs. I can see, and we are also celebrating by giving the party to few of my friends. No.
So when you're celebrating, when there is a party that is underway, Mr. Ralhan, which is the sector that is partying the most right now? Who is most euphoric for the kind of deal that has been struck? We're still waiting for the details, but tell us, because from what Piyush Goyal is saying, that this is very good for the labor-intensive sectors, and that part is going to be very excited about this deal, is what we got from Piyush Goyal.
Absolutely, the exports will increase. I think he is right, whatever he says. So they should give a complete report and kindly explain all the HS codes which are under this deal.
About MSMEs, engineering goods, textiles, leathers.
Everything, MSME, auto parts, hand tools, everything is all, the people are very happy. I can't explain you. The people,
but explain the
happiness to us. A lot of people are congratulating me.
Yes.
I said, why you congratulating me? We are all congratulating each other.
Correct. No, but sir, tell us, because from the exporter's perspective, at this stage where we are at, the last time when we were doing business with the US, we were around the 5 to 6% mark. Now, after it went all the way up to 50%, now we've come down to 18%. Yes, in comparison to many of our competitors, we are on a very strong footing. But what's the euphoria about, and which are the sectors that are most euphoric now that this deal is done?
The most benefit is going to the apparels, garments. The next comes the auto parts, then hand tools, and all other items. Fisheries, the very important is the fisheries. These are almost stand still after the tariff of 50%. And leather, of course, yes. Leather will be the biggest beneficial. Since we are one of the lowest in all our Southeast countries, all against our competitors, I think the people will start thinking about it, and the orders will start coming, not very, very soon.
Right. So the orders will start coming very soon. Typically how this moves, and David Roche is joining us as well, perhaps I can turn across to him. With this kind of euphoria that the exporters are enjoying here in India, I'm just wondering from the American side as well, whether they share this kind of euphoria as well about the access or the added access they're going to get to the Indian markets. Is this more than just the markets? David Roche.
Well, I feel rather like a Grinch who didn't get to the party, which is obviously going on in India about all this. But I have a much more sober reading of it. I would say two things. Number one, we have to wait for the details. In the case of the deals with Japan and India, that was weeks, not minutes, before we got the details. So I don't really know what has happened to things like access to agricultural markets for US goods. I just don't know where we are. But I would say this, look, I'd like to put this in a wider context. India has really done very well over the last couple of weeks. Number one, they've done the deal of a lifetime with the European Union, which takes just as much of Indian exports as America does, or almost as much. And now it's got Trump to back down on his tariffs. So the original calculations of what the damage these tariffs would do, the oil tariffs and the other tariffs, was about 1.6% of GDP. So let's say half of that is gone. Well, you've just added 0.8% to Indian GDP, which is not immaterial in an economy which is going to be growing at 6 or 7%, and which is already going to be boosted by additional trade with Europe. So look, it's very good. No doubt about it, very good. I'm not going to tell you how good it is really, because I don't have the details, and neither do you. But I would say one final word: do not trust Trump. That's today. You do not know about tomorrow. And I think the problem is that the volatility of politics in Washington probably means you're okay for a while, but it does not mean that that volatility or the politics of threatening has gone away.
We have Chandrakant Salunke joining us. He's president of the SME Chamber of India and India-US SME Business Council. Good to have you with us, Mr. Salunke. Perhaps you were listening in to what the Commerce Minister Piyush Goyal was saying at that media conference as well. Particularly when he talks about MSMEs, he's talking about engineering goods, textile, leathers, jewelry sectors, that all of these will be presented with many opportunities in this trade deal. That's what we heard him say. How are you reading this? In terms of the opportunities, how much of the pickup is going to be there after this entire lull period, after this entire period where we didn't know where this is going to go, especially with our trade with the Americans?
This is rather in a very good time, and the Dhurandhar time, we can say. The Dhurandhar deal, what we are mentioning on your camera, this projecting you are now. The point is, this is a very, very good news for the manufacturers, particularly from SME sector. I will be thankful to the Sri Narendra Modi ji, our Prime Minister and President Mr. Tam, particularly for providing this opportunity to MSMEs. Those are involved in manufacturing. Those are involved in exports. So we were having some little bit fear about what will be the future of MSMEs. Those are already enjoying the banking finance from the for the particular business purpose. They will become NPA. But somehow we have started exploring new markets in other countries, and especially thanks to the Honorable Prime Minister of India, that the mother of deal, the FTA we have signed earlier, and that because of that we have started very good initiative, particularly to finding new market. But nevertheless, America is attractive. America is very good for business, and of course this is a live project, or particularly those have already invested in US, already American companies invest in India. So I'm thinking, I'm sure that this will be a good news, a good atmosphere created by both the the dignitaries. And let us see whatever my friend said from America. We have to wait for some time for a executive order or the final decision on how this will be utilized, and especially for the purpose of the industrial purpose.
So it's going to be very interesting to see how exactly the agriculture and dairy part are going to be dealt with, Mr. Salunke, because Piyush Goyal has spoken about this as well. Prime Minister Modi, he says, has always protected the interests of farmers and livestock holders and dairy farmers. Is that a point of concern until we get more clarification and more details, Mr. Salunke?
Of course, we are waiting because our mainly the production from the rural area, and this will be help to the rural entrepreneurs, particularly the cooperative industry, particularly the small farmers, small enterprises. You must be seeing that, most of the startups from the rural area, they have been involved in our dairy, agro processing, food processing, and this will be a good opportunity to enter in US market. Now the China is struggling rather to enter in the US market again. They are struggling to connect with the right business partners. This is the right time to explore further business opportunity in US market, especially for the engineering products, dairy products, also the textiles, garments, marine products, and this will be an opportunity for Indian industry. But we are also studying. We are also looking seriously on what kind of the hurdles will be there, what kind of rules regulation they will be imposing, because reduction of the tariff is part, but how they are reducing the other things that we want to understand.
Fair enough. So it has been, as far as all that has happened so far, a bruising year for tariff brinkmanship. India and the US now have finally sealed a trade deal. The headline number is hard to miss. Reciprocal US tariffs on Indian goods dropping to 18% from 25% earlier, and from as high as 50% during the flare-up that happened earlier last year. But the announcement followed a phone call between President Trump and Prime Minister Modi, both leaders hailing it as an immediate reset of ties. And there is also the energy subplot. Washington claims that New Delhi has agreed to halt Russian crude purchases and step up American energy buys, potentially Venezuela too. And that is part of the thaw, at least that's the American version. Details and sequencing is going to matter in the fine print eventually. But the question is, how have we cracked this right now, this deal, the timing? In the last 12 months, India has reeled off a run of trade pacts. The United Kingdom, Oman, New Zealand, European Union just days ago, and now the US. So many in Delhi and Washington, D.C. are saying that the EU FTA, the mother of all deals, has helped unlock Washington to close this deal. Net-net, India is repricing its place in global trade. The markets have voted with their wallets today. The rupee has logged its best session in years. The equities have ripped higher. Tariff uncertainty is cleared now. So even as analysts are cautioning that execution and the fine text of this deal are going to matter, the markets are on a tear. On the ground, who stands to gain? We've spoken about these. Early winners include textiles and apparel. Besides seafood, auto ancillaries, chemicals, gems and jewelry, where price competitiveness in the US market improves immediately. But here is the caveat as well. Section 232 duties on steel, on aluminium and some auto parts, they can still bite at 25 to 50%, even after today's handshake that we are talking about. So the bottom line is that a strategic de-escalation with America, a trade competitiveness nudge against regional peers, and a sentiment reset for Dalal Street and the Indian currency. So now the big questions are about durability and deliverables and downstream effects on energy security for one, also the export orders as they come through. So we've asked India Inc. what this really means in the trenches. Fabrics, fine chemicals, all of them. Listen to what they've told us just before we set off this debate with our panelists who are joining us on the big question.
India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context, in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
So we're importing from India. We're subject to pay this additional 25% of penalty tariff. And compared to our competition, who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give us almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time.
This was something that the industry long awaited, and it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
So the industry voices are saying it, that now we are seeing that much more certainty. When you talk about the American deal that the Indians were striving for, that was in the balance, now we are getting some clarity on it. Yes, more clarity is required, but at this point, now that we have a trade deal, a lot of that uncertainty goes out of the window. It also begs the big question that we are asking today. Now that we've got some 5 deals going in the last 12 months, including the deal with the US, does this mean that our place in the global trade order is changing? Which is why we're asking, has India changed its place in global trade? And for that, we have an excellent panel to discuss this with. Let me introduce you to them. Well, we've got Chandrakant Salunke with us, President of the SME Chamber of India and India-US SME Business Council. Pradeep Mehta is also with us, Secretary General at CUTS International. He's NGO Advisor to the Director General at the WTO. S.E. Ralan with us, President of the Federation of Indian Export Organizations, the FIEO. Anubhuti Sahai is with us, Head of South Asia Economics Research at Standard Chartered Bank. And David Roche is here, Global Strategist at Quantum Strategy. Gentlemen, thank you very much for making the time. Chandrakant Salunke, first to you. With these American tariffs on Indian goods now cut to 18%, of course, from 50 and 25%, but what's the one immediate barrier that you see that SMEs are still going to face to convert this relief into firmed up American orders? Whether it's to do with compliance or logistics or working capital, where do you see the problem here?
The problem will not be much there because we have been supplying or exporting to the US market, and most of the exporters are aware about the their rules, regulations, hurdles, and compliances, and all the performance basis. Particularly now, this is a good time to learn more about it because the Trump administration have been defining and calculating the ecosystem for the imports. So therefore there will be some little bit hurdles will be there, but nevertheless Indian entrepreneurs, Indian exporters are very well knowledgeable, very well equipped with the knowledge and services. And of course our government of India, particularly Commerce Ministry, is behind our entrepreneurs and exporters to educate them, support them, provide hand-holding. You must be seeing that last 1 year, everybody was under the pressure, and therefore the government started finding the new emerging market. And therefore, that is the outcome for the tariff imposed by the Honorable President Mr. Trump on India. That's why we had gone for the instantly various deals with the various countries. FTAs is signed, the mother of deal with the European Union. That is the initiative taken by the government, and rightly taken because we have to achieve the Viksit Bharat. Without Indian SME, without manufacturers, and without exporters, it will not be done. So I'm sure that whatever the mention you are mentioning, the picture you're showing with the Mr. Modi and Trump, ye dosti nibhayenge. So I'm sure that they will, particularly follow the friendship between both of them, both the leaders, and to provide a level playing field for the Indian industries, Indian SME sector, Indian exporters.
So you sound very confident. Pradeep Mehta, are you as confident? This deal narrative also includes the US claim that India is going to halt Russian crude and step up American/Venezuela energy buys. How do you think India is going to sequence any kind of energy shift to preserve policy autonomy while locking in market access gains?
So you're asking me a question?
Pradeep Mehta.
Oh, Pradeep.
Pradeep Mehta is not with us. Let me take that across to Mr. Ralan, because as far as crude oil is concerned, we don't have clarity yet. And this, what we've heard from the American side, is only about halting Russian crude and stepping up the energy buys from the American side or the Venezuelan side, which is what we got from Mr. Trump when he put out that first tweet. How do you think India is going to make that transition? Do you see that as an easy process? Do you think that we could have got a good deal on the oil front as well, where we hold our ground?
I think Trump must be satisfied with whatever we are buying from Russia. That's why he declared such a big announcement. Yes, I agree. A lot of things are yet to be looked into. After the executive order, what are the rules and regulations? What are the other issues? I mean, that's the executive order is very, very important. That's what we are waiting. But as far as the Russian oil is concerned, I think it is very nominal. I don't cover that basically, but I think the Trump should be satisfied by whatever we are buying from Russia. There should not be any problem.
I'm just getting breaking news on the channel, so let me just apprise you of what I'm hearing right now, that India may get some concession under Section 232 is what I'm picking up. So Section 232, of course, includes steel, aluminium and copper. The US Section 232 duties, they remain around 50%. Some auto components as well, tariffs might still be 25% or around that much is what I'm picking up. Mr. Sajjanhar, so as these details come through, because the clarification hasn't come through, and we're looking at more and more speculation that's taking place on how exactly the deal structure is going to be. Of course, there is going to be a joint statement, but tell us, in your understanding and experience, when we talk about Section 232 and India may get some concessions under it, but there could be some exclusions as well. When you talk about steel and aluminium and copper, these are quite crucial, wouldn't you say?
Yeah, thank you very much, Vikram. Yes, you're very right. These are very critical, and we have had suffered this pressure from the United States even during Trump 1.0. So, we are quite familiar with what this can entail. But then even in the last term, we were able to, overcome these issues, and we were able to maintain and retain our exports of steel, aluminium, etc., etc. But if you permit, if I could, just come in on the question that you had raised about the energy security and India's purchase of oil from United States and Venezuela and Russia. So, first, as far as Venezuela is concerned, we have always been buying oil from Venezuela. We have refineries in India which are, capable of dealing with the heavy crude that comes from Venezuela. Not very many refineries in the world are equipped to deal with that. We are able to, and that is why, we were buying oil from there. Of course, the quantities were not all that large, not only because of the sanctions that were imposed, but also because the production of oil by Venezuela, because its infrastructure is not very well developed, it couldn't, bring up so much of oil that we could pick up from there. Now, of course, there are investments. If the production increases, then India would definitely be in the market. As far as the United States is concerned, you would recall that even in Trump 1.0, we had considerably, significantly increased our offtake of LNG and oil, shale oil from the United States. And even in the first few months when Mr. Trump came to power, we have been increasing that. We are at the moment importing our energy from 41 countries. So, whatever energy we get about 85% of our oil, 45% of our gas from different, from importing sources. So whatever we are able to get from the United States, from Venezuela, we'll be able to deal with that. And also, as far as Russia is concerned, I'm sure, companies which are under sanction, for instance, Rosneft and Lukoil, that, of course, our companies will not go to them. But otherwise, whatever else is available, and depending upon the pricing and depending upon the quality of oil, I'm sure we will continue to buy oil from there. Maybe the quantities might come down. I think in December we were importing about 35% of the oil exported by Russia,
Yes.
and it might come down depending upon global circumstances.
Right. So, I mean, of course, from the American side, we've heard that there could be a complete stoppage as well. Now, how much that is part of the deal, that we've heard from the American side, but no clarity from the Indian side yet. But talking about oil, we have to talk about the impact on the Indian currency as well. Anubhuti Sahai, perhaps you can tell us, the rupee has logged its best session today in years. Equities have, of course, ripped higher after the announcement took place. But what's your 3-month base case for INR now and bond yields if this tariff clarity is going to sustain? And assuming that the RBI is going to lean against excessive appreciation, how do you think this is going to play out on the Indian currency, which faced a lot of volatility at one level, but also a lot of depreciation? And many of the factors that many have been talked about is because there was no clarity on an American deal, a trade deal with them.
Sure. If you look at the whole this whole development, this is definitely a big positive. Clear skies for the currency, which has been under pressure on a host of factors. But I would say that in the last couple of months, a lot of pressure was coming on the negative sentiment as trade deal was not been finalized. So it is definitely a big positive. Let me break down our view on rupee from a short-term perspective and a medium-term perspective. Over next couple of months, that is by March end, our view is that there is further room for rupee to appreciate, probably towards 89 or 89.50. This is on back of one, trade deal announcement. Second, this is also a quarter where we have a positive seasonality, which effectively means that we export a lot better than what we import. And as a result, our trade deficit is one of the narrowest in this quarter. In fact, this is a quarter where we have also seen trade surpluses. So these two factors put together is clearly likely to push rupee to a stronger level. And while we expect the Reserve Bank of India to collect dollars in order to boost its FX reserves, we think they will be okay to allow two-way volatility and allow rupee to appreciate, because two-way volatility helps in the appropriate hedging behavior. From a medium-term perspective, when we say medium-term, let me put a quarter. So for December 26 end, our forecast is for 93 rupees. And it is primarily coming on back of a few factors. One, we have a view that dollar either would be slightly stronger or would trade sideways. Secondly, we are little concerned about the FDI flows, which have plunged a lot, primarily because of outflows. Gross inflows still continue. And this trade deal, while being a positive, is unlikely to turn them around back towards, say, an average of $20-25 billion, and definitely far away from the $40 billion peak, which we saw at the end of March 2020. And the pressure on rupee, the pressure on net dollar inflows is likely to remain, while next 12 months we should see a positive dollar inflows versus 2 successive years of negative inflows. We think the pressure on rupee to weaken from a medium-term perspective still remains, but far more contained than what we have seen in the past couple of months. From rates market perspective,
I'll just come to you about the rates market, but David Roche, since we're running out of time as well, I just wanted to ask you, considering how the Indian rupee is moving, considering Anubhuti is also talking about the pullout of FDIs. As far as FIIs are concerned, we've seen that happen over a period of time. And yet we are wondering whether India is in a more commanding position to get what it wants in trade deals. Yes, relative to Vietnam, around 20%, Bangladesh, around that much. India now is sitting at 18% when you talk about this trade deal with the US. So now it's about the durability of this competitiveness window. If the US is recalibrating us against the others, where do supply chains actually shift in 2026? How much of that is going to be coming to India, which is going to have a ripple effect on our economy in the way our currency behaves as well?
Wow. Well, I mean, that is one hell of a question. I'll give you my answer. I think the level at which we are told Indian tariffs, US tariffs on India are going to settle, compared to places like Bangladesh, Vietnam, which you showed on your screen a little while ago, I don't think that is enough to lead to a reallocation of supply chains. towards India. I think India is picking up supply, factories, etc., because it is making progress as a production center. But I don't think this is going to be tariff driven. So I would say don't bet too much on that. I think obviously the tariffs are good news. It would be very foolish to say they're bad news if they come down. But you do have to remember that there are two things out there that can influence things. Number one, the transactional approach to international relations and economics and geopolitics has not gone away.
Right.
And you can see further disruptions from further places. The second thing is, don't forget that all is not well in the United States. Yes, it's a nice place for you to sell your products, and I'm sure it'll go very well. But I would say that the volatility of things in the US could get much worse this year and quite possibly lead ultimately to a recession, which then works back through your new competitiveness in terms of the market to which you're selling not doing very well.
Right. No, that's a fair point. But in that sense, have we kind of decided that we are not going to put all our eggs in one basket? The EU FTA is one part of that story. Ashok Sajanhar.
Look.
You were saying?
You've been doing that for the last 2 years, and it's very clever. You should not fall into the honey trap of any single global hegemon. And you should keep doing that because, as you can see today, it pays.
It does.
So carry on.
It does. Mr. Sajanhar, do you agree with the EU FTA? We've closed it just days ago. But now one wonders till what extent has that catalyzed Washington's urgency right now? But also, how should India leverage rulemaking with the Europeans to hardwire better discipline from the Americans as well? Is that something that India can now do?
No, definitely. I think that would definitely have acted as a very strong trigger that, that we've been able to have this deal with, known as the mother of all deals, with such a large entity, $21-22 trillion, and 4-5, the fastest growing major economy in the world. So both of them have come together. I'm sure this, and also maybe some of the other factors with the visits of Mark Carney and Keir Starmer to China. So maybe the United States is feeling that, it is losing out on leverage which it thought it had. So maybe it had to come together. And I think this basic content of this deal, the substantive content of the deal, Vikram, in my view, was settled in sometime in July. I don't think any significant change has taken place in the contours, in the structure of what has been shared between the two sides. What are the gives and what are the takes on the two sides? So I don't think that is. Mr. Trump, for his own reasons, and this is not the time to go into those, and he was trying to apply that pressure. That has not worked, and so he has thought it fit. But India is in a sweet spot, I would say, at this moment, having signed both with the United States, with the EU, with UK, and with a host of other countries. But what it really needs to do is increase its competitiveness domestically. I think that is in terms of the structural reforms that are required domestically. We can, of course, engage with the outside partners to get better terms. But what is really required is to have, all the reform processes that are needed, fasten them, expedite them, take them forward so that we become more competitive going forward.
Well, that remains to be seen how competitive we are going to be. But today we saw the markets were on a tear. If the tariff relief persists, Anubhuti Sahai, do you expect the current account deficit to narrow through stronger exports, or do you think it'll widen through capital goods imports for capex? What's your FY27 balance of payments marker to watch if flows are going to re-enter India now?
So for FY27, our current account deficit forecast is in the range of 0.6 to 0.9% of GDP. So over past couple of years, current account deficit has remained very well contained and on back of this trade deal, assuming it gets effective immediately, we need to know the timeline when it becomes effective. Initially, there can be some widening in or the trade balance or the trade surplus with US can actually widen in the first round because we are a higher tariff economy. Exports can improve, but if US goods are tariffed at 0%, then we can also see more imports coming from the US. Plus, if what US is saying is right and we switch completely out of Russian oil to the US oil, there can be some impact on the overall import bill. But all said and done, even if there is some adverse play out on the trade deficit front, the services exports are doing exceedingly well, and therefore the current account deficit, even in the worst case scenario, is looking in control. So less than 1% of GDP. Balance of payment, we have seen 2 successive years of balance of payment deficit, and with this trade deal in place, our sense is we have now taken out the risk of a negative balance of payment story for which would have played out in the third year. So the trade balance of payment surplus can be in the range of $5 to $15 billion, depending on how much FPI flows should come in. It should be positive, but we need to see the delta. FDIs, as we highlighted, we remain cautious. So therefore, $10-12 billion of FDI flows. But net-net, a big switch from a deficit year to a surplus year from a balance of payment perspective.
So the forces that are shaping India's trade dynamics, also the resilience of our SMEs, the shifting global economic center of gravity, and the policy guardrails, we'll need all of that in the months to come. The insights here remind us that India's economic story is not playing out in isolation right now. It is being written in the boardrooms, on factory floors as well, and across the negotiating tables, also within the wider global realignment that we are watching and tracking so closely. The choices that we are going to make now are going to redefine what we understand as competitiveness, and that is something that is going to last for years to come. A big thank you to all our guests. Mr. Salunke, Mr. Ralan was with us, and of course, we have Anubhuti Sahai, David Roche, Mr. Sajjanhar. Thank you very much for your insights and perspectives on this edition of The Big Question. And that's our big question tonight, even as we discuss India-US trade deal threadbare. As we get in more details, we heard the big words coming in from Piyush Goyal as well, the Commerce Minister. A joint statement is expected. How soon? That remains a big question as well. But we are tracking this from every nook and every corner. You can rely on us on NDTV Profit. But for the moment, on The Big Question, I'm Vikram Oza. From me and the team, thank you. Good evening.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक है ना, मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey sing. This is my story.
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life.
Businesses like Share.Market PhonePe Wealth are building for. And to talk about that and the challenges that it entails and the opportunities therein, I'm joined today by Ujjwal Jain, who's the Chief Executive Officer, and Nilesh Naik, who's the Head of Investment Products. Gentlemen, thanks so much for taking the time. It's an exciting time for all of us watching this industry grow, right? If you look at it a decade back, you look at the numbers right now, it's staggering. Seemingly, as you're looking at it on an ongoing basis, it's not as staggering as if you look at it 10 years back. But in your life cycle as well, what is the kind of experience that you're having onboarding clients right now? Is it as frenetic the activity as you saw soon after COVID?
SIP growth has started was going very healthy pre-COVID also. Post-COVID, actually, it made more like a population scale shift. And when I say population scale shift, there was a change in terms of how people actually look at their wealth creation. And for the most part, actually, if you look at population scale, right? And when I say population scale, it's across the length and breadth of the country. Majority of the people cared about wealth creation through traditional assets and largely fixed deposits, which is looked with a lot of safety, gold, possibly residential real estate for most of the middle class end users. But it is only post-COVID people have started making that shift from traditional wealth creation instrument to financial instruments. Right. And there, mutual fund came as a very, very important instrument, thanks to the Mutual Fund Sahi Hai campaign also, which has helped build a lot of trust in the industry and the people to actually get into markets through mutual funds. But a few other things that have also transformed the way people look at markets. Some of them is like the entire inflation, right? The real returns for that matter. When look at FD returns, people realize that post-tax, the income they make on FDs, actually the real returns are can't compete with, can't actually help for adjusting for inflation. So that is where people started actually realizing that I can embrace equities market, especially mutual fund, which is more stable and managed by fund managers, and take a long-term view and use that volatility of market as with a lot of patience, especially through SIPs, and go on investing in that, invest in that, and actually make a long-term make better returns than fixed deposits. The other is the UPI, the Unified Payment Interface. What that has done in India is that when you get into mutual funds, you have to do Aadhaar-based onboarding. So the India stack has worked tremendously well for people to simply go online and open their mutual fund account. And with UPI, the trust rub-off to actually use payment as an instrument to set up SIPs, that has worked really well. So these things collectively has actually helped people to shift to financial assets, especially mutual funds, and that growth we are seeing even today. And that is now stabilized.
So just to drive home that point, Ujjwal, would you say that now the challenge, not just from the perspective of the investor, but also from the perspective of the platform or the service provider, is no longer access? It is something that practically everyone has the ability to do. It's not challenging to get more people to come and invest. Is that fair?
Yeah, actually on the access, there's still a lot of opportunity to make sure mutual fund is out there available to most at a lower entry barrier. So reducing the entry barrier is actually one part of the problem. On the access, that is still a big market opportunity for people to actually embrace mutual funds. But a larger problem statement is that, okay, I have access to mutual funds, as you started the show with that number of schemes that we have in India. What is the right mutual fund to get into? So when you're starting with a mutual fund investment, you cannot go with a trend-based mutual fund or a random mutual fund without any thinking. That could actually be you will start on a very bad note. Sure. So that is where, how do you make sure that you invest in the right mutual fund? So as a platform provider, we look at this as a very massive opportunity as a business also, but from a consumer point of view, that's a real opportunity to make sure that the customer come on your platform not just get access but also get right information and knowledge to invest in the right mutual fund and build a long-term wealth with a 10, 20, 30-year view.
Okay, so I want to bring you into this conversation because we've been talking about, I know that I have been at least from 2016 onwards talking about making the right selection of funds. The tendency is that you will select something and you will go back 3 years later and say, oh no, I made a horrible choice. Do you see that taking place even today despite the proliferation of information that is available?
Yeah, I think largely we still see that trend, and in fact you're right. If you look at numbers, right, we actually have done this study in terms of looking at what is the correlation between let's say previous 3-year return versus next 3-year return, and invariably irrespective of the category that you choose, you will realize that that correlation is close to zero, which means the past performance doesn't tell you much about what you can expect, right? But unfortunately, I think a lot of investors invest based on the past returns, and which is where, like Ujjwal mentioned, the investment decision making, choosing the right product is very, very important, so that from a medium to long term perspective, investor have a decent experience of investing into mutual funds.
The challenge though is always when an advisory comes into play or even a distributor comes into play, there is a one-on-one. But traditionally platforms have been used to have a low-cost model and to have an execution-based model. People take ideas from elsewhere and they execute. They look at it not from the perspective of I'm getting advice on this platform. But you guys are playing this differently. Can you explain how that works?
I think, Alex, when you look at investing, one thing is to say that, okay, this is the best product to invest in, or this is the right time to enter or exit the market. But I think what is also important, and I think more important, is that you avoid making big mistakes. If you avoid big mistakes, then you are more or less set to achieve your financial goals and create wealth, provided you are disciplined enough. And I think for platforms, that should, I think, going forward be the focus as to how you help investors avoid those big mistakes and how you help them to be more disciplined. So in our case, for example, we very early realized that a lot of investors are investing purely based on performance, which means if you have to sort of accentuate that behavior, you just show funds based on returns and people will invest.
Oh, you have a star rating.
You have a star rating
that is based on past returns.
Correct. And even the returns number, which are very easy to understand, right? But intentionally what we have tried to do is that stick to core products. For example, categories like flexi cap, large and mid cap, value. These are typically good categories for any investor with a long-term horizon to start their, let's say, SIP. And more importantly, when investors are investing, we have been heavily focusing on SIPs because that takes away the timing risk to a large extent, right? The other point that I wanted to mention is, we have launched a very interesting tool called CRISP.
CRISP. This is an acronym. I'm sure this is an acronym because otherwise it sounds like something that I would bite onto.
Yeah, yes, it is. So CRISP actually, Alex, stands for consistency, risk, and investment style of portfolio. So a lot of people invest based on past returns like we discussed, but not many people look at, let's say, consistency of performance in terms of rolling returns, etc. So we take that into account. We look at the risk in terms of, let's say, standard deviation of funds and compare it with the peer group and so on. And most importantly, we also look at the investment style of the portfolio. You often hear experts talking about, how investors should know, how the portfolio is managed. But the retail investors have no clue what that means, and which is where the style of the portfolio is very critical. And I think
so. When you say style, let's drive home this point, and you can weigh in as well, Ujjwal, because and we speak about it on an ongoing basis. Not everyone understands it, as you pointed out. So when you say style, you're talking about the overarching style of either the fund house or the fund manager to say that they're constructing their portfolio either from the perspective of a value bent, or they will have a momentum bent, or they will have a growth and quality bent, or they will have a low volatility bend. That's what you mean by style, right?
Correct. So each fund manager will have his or her own style for that particular fund. It can be a mix of styles as well,
Sure.
right?
Yeah.
But when you have perspective on the style of the fund, it makes it relatively easy for you to construct a portfolio which is well diversified across styles. And that's very, very important concept, when it comes to, investing, the diversification part. It's not just across stocks and sectors.
Extremely important that you're pointing this out, because if you look at the last 10 years, data will tell you that a value style has outperformed 7 years out of 10. It will tell you that a quality style is outperformed in less number of years. So it depends at what point in the cycle did you invest. If you invested in those 3 years when value underperformed, then you will hate the scheme selection that you've had, but you're playing it differently. Is that how it works?
Yeah, so what we are trying to make sure is that we take the last 5 years of data and individual fund houses, individual schemes, underlying holdings. So entire proprietary model, which is the CRISP model, has been built using that data and help you take a forward-looking view on basis the rolling characteristics across this rolling performance, risk, where you are versus on the risk side with your peer group within the scheme category, and also on the style. So what it helps is that if you realize that some managers have done really well on performance, but their style does not show any characteristics, which means that they've made choices in the underlying portfolio which are not characteristic to their actually scheme ethos, that all comes out well. Now, but the challenge actually, as Nilesh pointed out, these things appear to be very complex when you look it from a consumer point of view, and especially when we are working to make sure that the Bharat adopts this model when they get into mutual funds. The opportunity is that the access, when we talk about mutual fund, the experience to provide the access, most of the platforms have done really well, including us. Now, when it comes to decision making, so part of the problem is that how do you build your underlying technology, research platforms to actually able to analyze these mutual funds on an ongoing basis, and on the consumer side, how do you make these information and knowledge packed in a very simple, intuitively well understood form?
And Ujjwal, this is fascinating. So I'm sure that when you're building out these products, and ultimately these are tech offerings where you're trying to understand how somebody would behave in a certain situation. So I'm sure that conversations with your developers will be along those lines, where you're saying that you're designing the UI of that application to say that if I showcase this kind of data, if I have this prompt when I make a selection, then the tendency of the user is going to be 9 out of 10 times they will either sell or buy. Is that the kind of conversation that you do?
Take the example what Nilesh pointed about. Now, a lot of people say that people end up buying a lot of mutual funds basis the past return, and a lot of recency bias in that. A part of the problem is because of the user experience design also of the Well-Tech platforms, where they actually end up showing on their landing pages a lot of mutual funds with trending past returns, right? So anybody who is getting into mutual fund will tend to get captured in that user experience far more because they are starting first time.
And it's FOMO.
Yeah, right. Now imagine you build a user experience with that mindset that how do I put all that research that I've done through CRISP in user experience form factors, so that when people get into these mutual funds, they have the right information, and you are basically, by the time you make a mutual fund selection, maybe today 2 out of 8 are trying to be experimenting by getting into wrong mutual fund. Maybe 6 out of 8 would now eventually be in a better position to start with a right flexi cap or a large cap or a more diversified mutual fund. So I think part of the problem is to get the research right, and globally best comparable research, make that available to Bharat, and use the user experience design as a consumer tech company to make that accessible to consumers and make sure they adopt in the right way.
So a couple of things that stand out, and Nilesh, maybe you'll be able to weigh in on this on behavior, right? Which is that so many studies have pointed out that individuals make less returns than the schemes that they invest in. And just to drive home that point, as an example, suppose I'm investing in one mutual fund scheme, just one, and that scheme has given me a return of, say, 100% over the course of 5 years. I may have experienced an 80% return, and the reason is that I might have stopped it at certain moments. I might have pulled out at certain moments. I might have worried about the equity markets falling by 20% and then stopped an SIP at that moment. So what is that kind of behavior nudge that you're providing? Because ultimately stickiness is almost always the most important thing when you're building wealth over the long term.
Correct. Alex, I think, there is this interesting quote by Benjamin Graham, the investment guru, right? He says the investor's chief problem and even his worst enemy is likely to be himself.
Yeah.
Right. And when you look at, the behavior of the investors on ground, you realize how true that statement is. So, for example, you mentioned about funds returns being better than the return that the investor make. I'll give you one recent example from, our market itself, right? Just go back about 1.5 years, June, July of 2024, when market was really doing well. You just look at the equity flows, right? It was roughly about 81,000 crores. And if you look at, let's say, Feb, March 2025, by when, the market had corrected almost, I think, 12-15%, the flows came down to about 56,000 crore. And that's not the
You're
entire
saying gross flows.
Gross inflows into equities. And that's not the entire story, because there's also a SIP component to it, right? And if you adjust for SIP component, it's like 60,000 crores versus 30,000 crores. So there's a 50% drop when the market has corrected by 12-15%. And when you have people investing more at market peak and in investing lesser amount at when the market corrects, that's the reason for this kind of behavior. Now there's a big opportunity, I think, across board, not just the digital platforms, but I think that's the most important value add that an intermediary can do, be it a MFD or a RIA, right, to the investor's life. So how do you nudge people to continue their SIPs during those times? How do you get people to invest more when the market's correct? And those are the things, I think, which are very, very critical in terms of solving for investors' problem.
So I think this is important, and I'm asking from the perspective of business, right? Ultimately, you're talking about it, what should ideally be the behavior. From your perspective, it's good if they follow the right kind of behavior, because the outcomes that they will get over a slightly longer time frame would be better than a peer group that might make the wrong choices. Initially, they might see a spurt or they might not, but eventually it will fall off, right?
Yes.
So is that the model that you're trying to follow, to say, okay, I want to get maybe not the best returns in the industry, good returns that people can bank on so that they can have financial success?
Correct. I mean, so look at it, the money from where the opportunity cost of that money coming from. It's coming from fixed deposits.
Fixed deposits, yeah.
So the expectation is to make incremental return. Now the fact is, on the extreme end, equities market are sold with very high returns expectation without looking at the risk part of it. So the idea is that if you can balance the risk well and get a consistently better returns year over year, then as a platform, we have actually able to champion our cause of making sure that you get into a right mutual fund.
And just to add to what Ujjwal mentioned, right, see, mutual fund is not acquisition. Or let's say if you look at the last 6 years, 2019 end, we were close to, I think, 1.9 crore unique investors in the industry. Today, we are close to 6 crores. And the run rate is almost similar, even as we speak. But the most important part is to retain those customers, ensure that they have right kind of experience. Because whether you are talking about the intermediary like us or whether you are talking about the investor, I think it works very well when people stick to the product and invest with a long-term perspective. And that's where I think it's very, very important to do right kind of, offering right kind of products to the investors.
Yeah, I mean, I think that point is driven home by the SIP figures, right? You have a 31,000 crore gross number, but everybody in the industry agrees that that net number is significantly lower. 35% is what is expected to be the number. That's because there is pausing and switching of SIPs. You're doing a daily SIP as well.
Yes.
Are you finding traction in that?
Yes, we are finding traction in that, and I think part of the problem was that people with investable savings slightly lower, and as you expand the reach of markets, how do you make sure that even the people with very on the lower income households level can start at a very small amount and build that disciplined habit of SIP, which continue to extend from what monthly SIPs have given. We have launched a daily SIP with rupees 10. as a start.
Okay, very interesting. Just a last thought, Ujjwal, and we're closing out the program, but I wanted to get your perspective on the kind of demographics that you've seen, particularly over the last 1 year, in a time when the equity markets have not been absolutely fantastic. Are you seeing encouraging signs from tier 2, tier 3?
Yeah, I mean, 70% of our like AUM, fresh money that comes on our platform is coming from B30 and beyond cities. And I think, and that is where we have realized that majority of people to actually appreciate equity as an instrument for wealth creation and using mutual fund as an instrument, that I think irrespective of the market cycles, things are stabilizing. That is the factor of stabilizing. While still there are redemptions during a down market, but versus past, we are shifting the base as a country, right? And you can see that even as we speak, right? FII outflows continues, right? Month on month, right? Still, Indian markets able to absorb that with domestic money, and that is fully driven by retail money, which is actually represented by larger Indian society, right? And I think we are now becoming the strong hand here.
Yep, the base is shifting.
Yes.
On that note, gentlemen, thanks so much for taking the time. Well, you heard it. The base is shifting. And what a message to end this program on. Thanks so much for tuning in. This is NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade.